We're excited to have everybody here. We're excited you guys chose to spend your Thursday with us, and let's get right into it. Our first guest started an interest in trading almost 20 years ago when his dad took him to a 2-day stock trading seminar to learn how to use a software that was presented. As a result, he was hooked, and it became his daily routine of sitting down with his dad after work, looking at the stock market, and working together to manage his positions. After graduating with an engineering degree, he earned his Series 6 and Series 63 and was an advisor for New York Life. Ultimately became a successful trader and now is doing his dream job, which is teaching people how to trade. Welcome to the show, TG Watkins.
Hey, thanks. How's it going, man?
Good. So I first want to point out the whole dream job thing. You told me before one time off the air that you're doing your dream job, and
Yeah,
that
yeah.
this is the finale for you, all you ever wanted to do, right?
Well, you never know where life's going to take you, but it is true. I'm very, very happy with where I am. It's taken a long time to get here. I was self-employed for many years, and then I was like, you know what? I'm doing well with this, and I want to do more. And I'm really grateful for the people who, gave me that start in the beginning as a business and self-employed doing this. And so now that I'm with Simpler Trading, I have a much broader audience. And I can't tell you, like I actually 5 minutes before we got on here, we have a chat log and somebody popped up on there and said, hey, I just took a trade in SSW because of your system, and he took an option and it's up 350%. I mean, this is the kind of stuff I get, and I just can't be grateful enough for how much I'm helping other people, and it feels good.
Right, and how cool is that? I want to say one thing. I know you're on a sort of a tight time schedule today, but I want to say one thing. I saw Dean Graziosi and Tony Robbins one time live, and one thing that Dean had done, and Brendan Bouchard was there as well, and they had done a study on successful people, and they found that the one of the most common traits of successful people that they didn't know they would find was that they're grateful, and
Yeah.
that a lot of people that take things for granted aren't in the successful lane, but the people that are grateful somehow was an interesting thing. The one thing that stood out there, and I've noticed you're an extremely grateful guy, and you're extremely appreciative, and you are genuinely excited to be doing what you're doing. And before you answer that and talk about why you're excited about what you're doing, I do want to say I know you're short on time because you're going to Cancun shortly here, and that's one of the amazing parts about trading is that you have that kind of freedom. But why does it get you so excited when your students make money?
Well, I was going to say the first time you and I met each other, you were on a beach, right? You were somewhere drinking a nice beer,
In
sipping.
Spain, yes,
Yep,
that was
Spain.
amazing.
Yep. So tables have turned. I'm going to be on the beach coming actually today. But I think it's good because we're social animals. That's what humans are, and we like to help each other. At least I like to, and that's what I've always grown to do. My mom and my dad have instilled really good values into me, and I just figured, you know what? If you help other people, it kind of comes back around to you, and it just I wanted to do that. It's like why not help somebody else if you can help yourself? And so with this platform that I have doing this, I had mentors who put a lot of time and effort and energy into me. And I just figured, you know what? I'm really happy that they did that because I'm now where I am. So I might as well turn that around and help other people get where they want to go if I have that ability. So it's just this giant big circle that I really appreciate. And it feels good. I mean, as I said, I get texts and emails all the time. And I just I don't know. There's not much else to say about that. It's like you're doing a good job out there, and it just feels nice.
That's great, amazing to hear. I know, like I said, you're short on time here, and you and I could easily spend the whole 45 minutes talking, but I'm pretty sure that the people here want to actually learn something about trading instead of you and I talking about life. But anyway, let's go ahead and get into that. I do want to point out, last time you were on the show, you took 2 slots. We had you be a premier presenter, and you spent about an hour and a half. I know you're short on time today, so today will be just a 30-minute presentation, followed by 10 minutes of Q&A after. But last time you had a record number of questions from the audience. So I want to encourage everybody again to ask TG questions in the Q&A box on the GoToWebinar control panel. And he's really good about getting through those questions in the presentation. So I'm going to go ahead and give you the screen now, TG, and I'll be back in about 30 minutes.
All right, great. Let me make sure we got the right screen showing. All right, and then do we have the questions you can send over to me, or is that the chat?
Oh, that was my bad. I did not. I'm changing it right now. Okay. So you see the question box now? Once let's have somebody type something in the
Yeah,
question box here, say hi, or something so that we know
yeah. Don't
TG's
be
here.
shy, everyone. I
There we
do
go.
see a few people in there.
That's
Good.
right.
Yep.
Okay.
Okay.
All right, take it away, TG.
Great. Thank you. Let me, gotta blow this thing up. It's trying to get those double arrows, it's challenging. Okay, so we got that, and then you got the link that I'm gonna have you post. Hopefully you or Anna will be helping me with that. All right, if anybody has happened to be here, seeing me again, this is a new presentation. You'll be seeing some of the stuff I've talked about before, but I've got a different thing here, so stick with me if you happen to see this again. But what I am going to be talking about is the Moxie method, and it's how I generate 10 to 200% returns, even if you're new to trading. So just as a little example, it's like, okay, who the heck am I? If your first time here seeing me, I do like to kind of at least lead with this, not for boasting, but to show like, it's happening, we do it, I do it, it is possible. This was back in, actually, let me get one more thing up. I need my cursor, forgot about that. Sorry, got this. I need to be able to draw. And then as soon as that loads, cool. All right. So what we're looking at here is this was back April of 2018. I had an account, and this was an IRA account of just $68,000 roughly. And over the course of about a year, a little over a year, I was able to grow it to 100%. So you could see that down here in the bottom left, I got it down up to $136,000 from my 67 originally. Took just a little bit over a year. And this was an IRA account trading just stocks. And so that's the kind of stuff that I want to bring to you and show you that it is possible to do. So this is for you if you want consistent profits from stocks with a simple, proven checklist to follow. Even if you've never been profitable before. I mean, that's the whole point of why you're here, is because maybe you're sputtering around and having some troubles and not quite sure what to do. We're here for you to help you get there. And so my secret for these precise stock trades is, like, this is my trade. This is my chart. This is the indicator that I use. This is the one that I've worked on and developed. And what you'll see, the consistency with it. So right here, I call it an inverted trampoline move. And we'll get more into this a little bit later, but I just want to kind of whet your palate with this. But you see how price went over this purple moving line and it was below, the indicator was below, and look what happened next. We got a big pull down, and this is on the market. This is the S&P hourly, and look, it's the same situation here. See how the indicator was below zero, but price was over that purple moving average? It's the same stuff, and this is the kind of thing that I try to show people, that it is consistent and that you can see these things and they're powerful. And these pops and drops, you can find them with the checklist that I've developed and that I've provided. And again, we always want to find those pops. That's the kind of thing, that's the sexy stuff, that's what really makes money. But knowing when something is going to drop is just as important, because if you aren't prepared for it, you're going to get run over. But we should always be using stops, right? And sometimes if you really do want to take advantage of either counter trend moves, or if you want to take shorts, you can, because of what the Moxie indicator and what the method helps you see. Once again, this is the S&P and it's on the daily chart. The same situation occurred. See how price was over the purple line? See how the indicator was below zero? It's the same setup, it's the same concept. And did you see what we got after it? We got a big move down. And those are the kind of things that I help guide everybody into. And so I'm able to look beyond price and see what's really going on inside of price. A lot of times I think, we say that price is king, but I really sometimes think it's a facade. I like to know what's actually going on inside and underneath and what the energy is telling me. And it's this method that I figured out that has allowed me to grow my account a little over 103% in just about a year. And you'll see how it's possible to get into the right stocks at the right time. Now, I did just update this slide, because I had the earlier one back when I was doing this presentation, but look, we had the Moxie price trigger, which is the green arrow, and it maintained itself over the moving average. And this thing in a month, just about a month, and even just conservatively, not even all the way up to the top, but just conservatively here to here, went over 100% in about a month. Just astonishing. This was INMD, if you want to go take a look at it on your own charts. And that's just stock. Think about if you had an option on that thing. So you'll see how it's the same setup that I used. You'll see how this is possible to do. And you'll notice here, this is PDD. We got the Moxie price trigger, that's the green arrow, and notice how it followed the moving average right there. Now this one, again, it went up a little bit further. So far, it got earnings in between there, and it's down. But boy, this is the kind of stuff that we take, and we just ride them until they peter out. And what you'll see on this one, Same situation. Have you seen that I've now shown 3 entries? There's the price trigger, and see how it follows the moving average up right there. You'll see that this is the same setup I follow over and over and over in different configurations. And here the same thing, VIPS, here's the daily trigger right there on the daily chart. So we got the hourly over here, and we got the daily on the left, and that was a 50% move right there. And that's how I was able to catch these big moves. And again, I don't sit at the computer all day. For me, I'm an end of day trader. I tell everybody that. That's what I do. That's how I market myself. And that's who the people who follow me, they understand I'm an end of day trader, because if I know how the stock market ends, I know where it's going to go the next day. And here's an example on Snapchat. I can go short too. Now, don't let all the writing kind of scare you or anything. It's just how I annotate so that when people see my charts, they can see the whole process of what I'm looking at. But you can see that we had the price trigger to the downside right there. Then we hit our double top right there. And then we went short there and then just took it because it gave us a pretty good drop, 16%, 15 days. Not too shabby. And this is a overview of all the positions, all the accounts that I manage. Going back to July 2017, I had $120,000 in that. And then July 2018, a year later, I was able to get it up to 203,000. And then this last July 2019, managed to get it up to 517,000. And that's the whole point of what we're trying to do here. The objective of any trader is to get your net liquidity of the accounts that you manage to go from the bottom left to the upper right. You know, any down tick should be small. They're there. I mean, if you look at this one, I had a while where things just weren't doing much, but then it started to pick back up, and that's just how trading is. But you want to make sure you go from the lower left to the upper right. And so a little bit about me, kind of since I showed you about how the trading goes and some positions that have worked well. My path is that my dad introduced me to the stock market as a kid. I didn't know anything about it. I wasn't really exposed, but I knew it was important, and I knew that it was something that I should be paying attention to. And so, yeah, going back to what Jack was telling earlier, I'm sure many of you have gone to something like this, the stock trading seminar, whether it's virtual or it's actually there in person. Can you imagine actually seeing a 12-year-old at one of these things? Or imagine if a 12-year-old was sitting on the other end of this computer right now, listening to this presentation. And it was really funny, because what I was trying to think of is I went up to one of the mentors up there, the people who were leading the show, and I said, is this really possible? Can you actually trade for income? Can you really make money off of this? And he said, of course. He said, no one was born knowing how to trade. And so we can all teach this. We can all learn it. It's teachable. Therefore, we can figure this out, and there's a way for you to make money. And that's what was that was the thing that really stuck with me and was important to me and kept me going in some of the rougher times when I was on my learning path. And so my interest shaped my trading style. I graduated from Arizona University with a manufacturing engineering degree in 2010. And that kind of shows the mechanical orientation that I am. I like cars, I like airplanes, that kind of stuff. And then I kind of sidestepped, and I went into financial advising with New York Life from 2010 to 2014. I enjoyed that, but it wasn't quite the field, quite the thing I wanted to do. And so I took what I learned there about money management, about investing, about just the markets in general, and I circled back, and that's where I actually went back into the stock market for trading. And then if you guys hadn't figured it out from that previous picture, but I am also a pilot. My dad and I are both pilots, and being a pilot has instilled a lot of discipline in me, because if you're reckless or don't follow your checklist, you can really kill your account. And so that whole checklist thing is really important to me. And then I found that there were a lot of similarities with trading. The checklist, you need to have that process. You know, when it comes to getting into a trade, you need to actually know, well, what are you doing? We're not just throwing money at something, or we're not just going to jump on board. We're looking for a setup, and that setup has a process to it, and we put a checklist to that process. So same thing with flying. You're not going to go put the flaps down or up before you take off, or raise the gear before you take off. There are things that you need to do first, second, and third. And then rules. You need to figure out what the rules of your trading are. Do I get in here or do I not? Like what's going to violate those rules and make it so that you can stick to them? And then discipline. And if it's without discipline, then we really are we're just gambling. That's really what it comes down to. And we need to be able to have that discipline to stick to those rules and stick to that checklist. And all of these are vital to keeping the plane and your account from crashing and burning. And why I love the trading lifestyle. Again, Jack and I were covering this earlier. I'm going to be going down to Cancun like right after this presentation for a week for a friend's wedding. and it's no problem. I bring in my laptop, they got Wi-Fi, I can check in. You know, as I said, I'm an end of day trader, so you know, it's pretty good. I'll be talking to the subscribers I have and seeing if I can find them any trades while I'm down hanging out on the beach. But I moved to Denver 5 days after my 33rd birthday just because I wanted to try it out. I was like, hey, born and raised in Arizona, let's go do something else. And so here are a couple of pictures of me, you know, reading Trading in the Zone from the sun deck of the apartment complex that I was in. And then I did learn how to ski that year, and now I got skis sitting in my closet here in Austin, Texas. So I'm gonna have to find some time to go do something about that. And then the other thing, family. Now I don't have a family yet, but my sister just had her one and only daughter. I think she's about 18 months now. So just cutest thing ever. But that's the kind of thing we want to do. So after I come back from Cancun, I'm actually going to be going up to Seattle to visit my family for about 2 weeks up in Seattle for New Year's and Christmas and all that. And that's how we can forget the 9 to 5 grind. You know, I do work with Simpler Trading, but look at all the thing I can do with it. And so I get to go up there and visit my family and live life the way I want to and still do the thing I love to do with my dream job. But what if you don't have an edge? And that was the thing that I had a hard time with. Like, what if you don't know how to grow your account? What if you can't find those right trades or missing out and getting in too late? And that last one really gets me because we look at this stuff, we can see this thing all over the time. We can really see this, but if we keep missing it. We just don't know how to get in, and that's the kind of stuff that I'm going to get into. And so the big leap, that was the struggle that I faced when I made the big leap, was finally deciding to leave corporate finance, to leave the financial advising, kind of do it a different way. I could have gone into aviation or engineering, but I chose trading because of the freedom and the ability to leverage my time, just like what I'm doing this afternoon. And I spent years studying the squiggly lines that made no sense to my brain and to my eyes, and I just couldn't consistently find why price moved. And so this, no joke, this is literally how the screen of one of my mentors looked like. And it boggled my mind. I couldn't see what he saw. I didn't get it. I couldn't even see price in here. And so I had to figure out things that didn't work. And I could look at this and say, that isn't working for me. I need to kind of go off on my own path and start figuring out something that, speaks to my eyes. And so what I did is I started looking at stocks, charts over and over and over, and I started to pick up on something. And one of the things that I started to pick up on is, well, okay, so here's a moving average line, right? And price went through it to the downside, but price bounced off of this same moving average line. So what's going on here? Not that one's a bad trade and one's a good trade. Both of them could be winners as long as you knew which direction it was going to go. And that was the thing that I really set out to figure out how to do and recreate and what's going on with that. And then the other thing was I get into stocks and they just go sideways, and I couldn't figure out what they were doing or why not. And that was the kind of stuff that was really driving me crazy, and I needed to go back and figure out. Or how about this one, the potential for a wipeout? I mean, have you guys ever gotten into something like this? Things look fine, it's trucking up, 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 all of a sudden just to get hammered down. Maybe it's a news event, but sometimes we can actually see that this is going to it's going to happen. And that's one of the things that I can show you about, kind of a way to avoid most of this situation. And trust me, trial and a lot of error. Basically, it was a slow death by 1,000 small losses, and of course, there are a few big losses in between there. But I tried just about everything for the few years that I was really trying to get out there and learn this. And I just couldn't find that simple, objective way to make profitable trades. So anybody out there familiar, or not familiar rather, with The Matrix? If you're not, it's a movie about where the humans are basically in a digital world and the computers are taking over. And if you're not like one of the special ones and you try and look at the computer world, it looks like a bunch of code and just all this letter and computer stuff on the left. And that's what trading and looking at charts looked like for me. It just didn't make any sense to me. And so what was happening is it was just a bunch of squiggly lines. I mean, charts like all over the place, right? Squiggles, and we just don't know what we're looking at. But given enough time and shown enough things, and you're shown some patterns, and then they start to make sense, and then you start to see this pattern, and you start to see that pattern start to pop up, and you're like, oh, okay, I now get it. I'm seeing some things, and now this looks like this. This is the matrix that when you're finished, when a special one could actually start seeing, could interpret all of these code and actually start seeing the figures and people that it needed to. And that's kind of what I feel like now that I see in the stock trading world. I'm seeing these patterns all over the place, and now they speak to me and I can actually see where to get in and where to get out. So this goes back to that original one that I showed you, like, here's that price coming into that moving average and moving up. Here's that one going into that moving average and going down. And I found out one of the biggest things for me that gave me a little bit of a leg up was I started to use more than one time frame. And on this one, I started to go down. So this is like, the daily time frame. Over here is the hourly time frame. And so what I did is I started to look at this, and as price approached that moving average, I started to look below, and you can see here, the Moxie trigger showed up, and then you could also see that price started to scoop up along that moving average, and everything was starting to look pretty good. But then this one on the right side, when price was going down through that moving average, I could see that the Moxie indicator here was below zero the whole time and trending down, not looking so good. And then you can see here that price was underneath the moving average all the time. And so it gave me a better view and a better insight of what was going to be happening on the higher time frame. And these are some of the things and techniques that I started to incorporate and that I now teach everybody who follows me. And again, going back to what didn't work, I had to figure out these squiggly lines. They weren't enough precision. Like, why weren't they working for me? It's because I couldn't tell. They just looked like lines. I couldn't tell when one was starting to turn up or turn down or expand or contract. I needed to redesign them to actually speak to me a little bit more. And that's why I've designed the Moxie indicator the way I have. And so here's my chart. This is exactly how I trade. This is how everybody sees my charts. And I like to keep it clean and simple. Notice that I've grayed out my price bars. I don't have the red and green. I don't really care if it's up or down. I want to know where price is in relation to the moving average. And then you'll notice the stair steps for the indicator. And what you'll see is that it might seem like a squiggly line, but it's not. They are unique intervals and they have these stair steps to them. And that speaks to me. It tells me a whole lot more information. I could see them more clearly, and it tells me everything I need to know in a much bigger, better picture. And then positive and negative area. This is positive energy, this is negative energy. And the indicator is telling me what price should or shouldn't be doing. And then we have divergences. So you see here, just one example. Here's price going sideways. Notice that the indicator is starting to trend up. That's telling me that there's energy coming into this thing and it wants to go up. You can see the opposite. Here's price going sideways. Here's the indicator going down. It's telling me that the energy is wanting to come out of it and this is starting to go down and I should look for an exit. This is the kind of stuff that I'm looking for. And precision. The precision is what we're seeing with the Moxie price trigger. You'll see that, and then you get a move. You'll see that, and you get an exit. You'll see that, and you get a move up. You see that, and you get a move down. It works really, really well. And that's the kind of stuff that I want to bring to you. And so behind the curtains, this is what I'm talking about. Like, do you really want to see what's going on inside of price? And so here we can see that we've had price going down, 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 and what I call divergence. Notice that the indicator just went flat. And what it's telling us is basically, nope, I want to go up. I want to push price up. I want to go. And as soon as it then clears the moving average, it pops. And then it runs into the other one, and then that's about the end of it. Then it comes down and does a double bottom, but look, the indicator is now higher. And this is the kind of stuff that I'm talking about. It speaks to me, and that's what I want to be able to teach you about and show you how the indicator speaks to you and tells us what's really going on. Now, all that can be fine and dandy, but we need to have that process that works for us. And going back to the checklist might seem very common to us and ubiquitous, but did you know it actually had to be invented? And it was invented in the late 1930s from the Boeing Corporation when they were trying to design the B-17, and they had really good test pilots take off, and they crashed on takeoff, killing everybody on board. And they went back and figured out that they had left a little simple something, on the control. They forgot to turn it off before they took off, and so they couldn't move the controls, and so they crashed. And they had figured out that airplanes had started to become so complex that no matter how smart you are, we as humans were prone to just forgetting a step, and then that was the problem, and it killed everybody. And so since then, they figured out an order of A, B, C, D, E that you need to do before you can take off. And we do the same thing for trading. You need to know that you're setting something up and that something else isn't going to get in the way. And what we're looking at here is this is one of my first trading checklists. It was more of a flow chart, but still it does the same basic thing back when I was trading. Now I've modified this and I've made it better, and that's what I'm going to be having in the package. And so I set out to build that checklist. I had that and I started looking at this. Of course, the pilot in me felt right at home with this whole checklist thing, bring it into trading. And with that, I started to catch these lucrative trades. Here's mRNA. You can see here, there's the Moxie price trigger, little dip, and then it started to go right on up, and then there's the exit with the Moxie price trigger on the exit and the cross of the moving average. Now, if you actually go back and look at your charts, MRNA just finished a move. Everybody in my session, we just finished wrapping up a 25% move on MRNA. This was a 33% gain. The one we just had was 25 roughly. And then I was finally able to see opportunities to make money where others didn't. Now, this is an old one, Neo. Since then, it has gone totally haywire. But I just like showing this one because it's so beautiful, really. You can see here we're getting that moving average. You got our Moxie price trigger, and then it just explodes the next couple of days. And then based on my checklist to get out, that's where I got out, nabbing a pretty quick 33% gain on that. And what I had discovered is that I had built a reliable method for knowing when a stock was likely to pop or drop. And this reliability allowed me to leverage the risk that I had to say, if I know this is going to work X number of times, well then, hey, I can put some good money on this and make some good money with it. And of course, we need to know when to cash in. Like we take our trades, but we don't want to just marry these things. We don't want to hang on forever. But what you can see is we had the Moxie price trigger there. It maintained itself over the moving average. Then we got another one on the lower time frame, and then that's when it popped. And the fact that it went so vertical, my checklist said, well, then you probably need to get out. And so I did. And then you just wait for the next trade to come along because we don't know what's going to happen after the move. Each move is kind of its own situation. Now here's another one, just to show that this can actually go through different investment vehicles. So if you like to trade oil, if you like to trade natural gas, whatever, this is UNG. And there are two situations here. You can see one, here's the Moxie price trigger, crossed the moving average, ran into the other one, 21% move on that one. Then you can see here's another setup. And these are the patterns I'm talking about. This is the stuff that I teach about, these kind of patterns. And if you don't know what that is, they're going to be screaming at you after the class and you'll get to see all this stuff. Here's the Moxie price trigger and then pop, pop, pop. Now, because I'm a stock trader, I like to use leverage. I like to use the 3X ETFs, which for this one is UGAZ, and these equivalent moves went 60% and 28%, and that's just stock if you use those leverage ones. Imagine what it would be if it was an option too. VFC. Now this one only turned out to be about 9.5%. Here's our entry. There's our price trigger, follow the moving average. There's our exit. There's the Moxie price trigger to the downside. That's all this move had, so what, 10%. Take it when you can. And if that's all it's going to do, that's all it's going to do. And of course, they don't all work out. Losses are the normal cost of running a business. You got to think about it like inventory, utilities, and employees, but losses must be controlled just like expenses. If you've ever been anywhere in the stock trading world, you know that that's the thing they beat into your heads, like you got to control your losses. So for this one, on Goose, I was looking for price to maintain that moving average. Remember, see there's the Moxie price trigger. I was looking for price to do that. It didn't. So that was my stop. Little 3% loss, no big deal. But here's the same chart just a couple days later. You got to know when to try again. Don't let mistakes add up. Don't let them really affect you. You got to take your licks and move on. Don't hold back from when you make a mistake, because I knew something was happening with this one. And remember, I was trying to enter it there and it didn't work. So it came down and look what it did. Here's your double bottom. Here's your divergence. There's the price trigger. There's the support of the moving average. And then since I took this screenshot, it actually went up to the 200, the daily 200 SMA, and it turned out to be about a 13% trade on that one, pretty quick. Here's another one, Okta. You can see this one was holding nice, steady. And the internal energy that Moxie was telling you that it was going up, 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 up. Remember those moving averages on the higher time frame coming in. Was this going to fail the moving average, or was it actually going to go up? And the lower time frame with the indicator is what was telling me that it was actually wanting to go up. So there was my entry. Took a little first exit. After that dip, I took my second exit. Very happy about that. 22% and almost 14% on that. Yeti, here's another one. Now this one, it's since come down, but I'm still looking at it. Currently, it is right here on the daily 200. It's past earnings. I like that. This thing's actually looking pretty good, but look, here's the Moxie price trigger. Managed to hold the moving average, got past that moving average, and that was a quick 13% move right there. So now this one, this is really what the story I love to tell. When I was doing all this and I was telling my friends, been working on this for a few years, I'm finally excited and happy that all this is starting to work out. My family and friends started to hear about my success. My mom gave me $6,000 to actually trade for her. I was a little bit nervous, but she's my mom. If anything went wrong, she'd probably still love me, hopefully. But here you go. There's the Moxie price trigger. So I got in and it did immediately pull back on me, but my rules, remember the moving average, my rules said to stay in. And then when it started to work out again, I doubled up, added more, and then this thing really started to move. This is IGC. This is one of those cannabis stocks back in the day. And the first move, 144%, took some off. And it just kept going. It was astonishing. It just kept going. And this is just a stock, 257% on just stock. And at that point, I was like, this thing is nuts. This is insane. My checklist says, okay, you need to take some off. So I took 3/4 of the position off, and then I let the rest of it run, and I took the rest off when this thing started to implode and nabbed 231%. Now, that didn't allow my account go from 6 to 20, but it was one of the components that really helped it. And it was really very exciting to see this and think, hey, I'm helping my mom with this. And that's the thing we have to think about. Like, what are we trading for? What are we giving ourselves this anxiety for? What are we giving ourselves gray hair for? What are we doing this work for? Are you doing it for your grandkids, for their college? Are you doing it for your retirement? Are you doing it to leave a legacy? Do you want to do it because you want a new boat? Like, what are we doing this for? If we have that motivation, we can figure out the inspiration of what we're doing this for. So, and just not even a year, that thing went from 6,000 to 20,000. And that's the kitchen that I helped my mom rebuild. So she's a happy camper over there. So why reinvent the wheel? I want you to be able to leverage the time and the years that I've spent studying how to do this, making profitable stock patterns. And then I want you to be able to take advantage of the growing pains that I had, designing and refining my Moxie indicator and the method. And then I also have the scanner to find those price triggers that I've been showing you and the trampolines that I've shown you. And I figured out a way to scan for those things to find those opportunities right now. And that's the thing. I want to be able to shortcut this learning experience. Since it took me so long, I've already accumulated all that, and I want to like bundle it all up and give it out to you guys. So the first time I'm offering the Moxie indicator. So whereas before I was offering the service, we still have the service, but now I want to put this in your hands so that you can actually own the indicator and trade it the way you want to trade it. So my goal is to help you find these precise stock trades without having to stare at the markets all day, because remember, I'm an end of day trader. So this is me, this is the method, and this is what I wanted to show you guys. There we go. And so this is it. This is the Moxie stock method class. And in this is where you can sign up at simplertrading.com/stocks. So Anna or Jack, if you want to be able to post that into the room, I'd appreciate it. And what you guys are going to be getting, you're going to be getting the strategy session. It's the class. As it turns out, it was 5 hours. It's jam-packed of information. Very excited about it. We took a few breaks. We had a whole lot of people in that class, and they were very active, engaged, and I just really, really enjoyed it. And actually, let me get over to the next one because that kind of breaks everything down a little bit better. So what you'll get is in the class, and you get all the information that we did. And then you'll get the indicator, and you'll get the scans. That way we can find those trades that we're talking about. Now, I did put a star next to a couple of these things, because in this package, you're going to be getting 3 days of live trading that we did, and each class was 3 hours. So you're going to get 9 hours of live trading that I did, running through the markets with people in attendance, talking to them and seeing how we're doing, and showing example after example after example after example of what we did. Now, I'm sure I get a lot of questions all the time, like, does this work for futures? Does this work for Forex? Yes, it does, and we've had proof of that. I don't personally trade it, but since I've released this thing, I've had people and subscribers come back to me and say, hey, yes, this actually does work, and they've been showing me trades, and I'm very happy that I've got other proof since I'm not a futures or Forex trader. The other thing that you'll see is here's the class, the course breakdown, 5 hours worth of stuff, and we have it all broken up so that you can take it piece by piece by piece. And again, basic to advanced, because I start out all the way from the basics, talking about moving averages, talking about how the price interacts with these moving averages and how they interact and these patterns that we can see. And then I start to show more and more and more and ramp it up. And then we get to the full, okay, here's how I actually trade. It's great. And so don't be fooled. There's just a little recap of what I wanted to show you. If you want to avoid getting suckered into bad trades as much as possible, look at this. Look at this. You think that price is going to bounce? Well, no, it doesn't. The whole reason is the Moxie indicator has been below 0 this entire time. So a long trade should be the last thing on your mind. So we don't get fooled anytime we think that price is going to take off, because the Moxie indicator is telling us, no, it is not ready. The internal energy just is not ready. And what about this, that collapse, that thing that we were talking about damaging your account? This is what I'm talking about. This is that inverse trampoline move. And I can't tell you how good that is. In fact, we just had one of these on XLF. If you guys want to go look at that, we just had a big drop on XLF. It's because we had an inverse trampoline move happening. I was telling people, yeah, you better watch out for that. And so the whole checklist, the whole point of what I teach and how I show is that we want to standardize this. I want people to be able to look at a chart and we all see the same thing, that we see this double bottom, that we see this positive divergence, then we see the Moxie price trigger, then we see it get scooped by the moving average, and then if it happens later, we get a trampoline move, and this is why I call it a trampoline move, because it's just like it goes down and then shoots back up. These are the things that I want you guys to be able to see time and time again in a objective way, and that's what my checklist does, and that's what the class and everything I've shown you inside of it will do for you. So 3 reasons to own it. More control over your own trading, obviously. Moxie is a complement to your trading style. It's not the end all be all, and if you guys have different indicators you like or different methods, great. Add this to it. You might see some new things, and I think that'll add to what you're already trying to do. And you can use Moxie on stocks, options, or different time frames. If you guys want to day trade, you can. The principles still exist. The person I told you about trading on futures, he was trading on the 2 and the 5 minute, and it still worked. So, okay, yeah, and then this one, I always put this at the end. People are asking, well, what does it work for options? Or what if you do options? I said, works for options, it's fine. I'm just trying to tell you how the stock is gonna move, and then you can do whatever you want after that as far as your strategy. Do you wanna do a strangle? Do you wanna do a butterfly? Do you wanna do call spreads? That's up to you. It won't affect the stock trading style that I have about how the chart is gonna move and how price is gonna move in relation to these moving averages. So if you're an options trader, it will help you just as much too. So imagine catching some of these 10 to 200% gains on options. And as I said, I just had somebody send me something today. He caught a 350% option in just a few days. So hey, it's out there. And so what you'll get with this is you'll get the Moxie indicator, you'll get the scanner, you get the checklist, the trading rules, and the glossary, because I kind of have some lingo that I talk about, like elf shoes and stuff. And then you'll get the strategy class, the 5-hour thing that we talked about, which is live. We've got people in there. You'll get all of the dialogue, all the chat box with that. And then you'll get the 3 days of live trading, which is 9 hours in there. So remember, simplertrading.com/stocks. And then I'll just leave you off on this. The whole point of what I'm doing here is so that you guys can see the same thing and make it relatively mechanical. There's your trigger, and then it stays above the moving average. I don't know how much more simple it gets, and that's what I'm trying to do for you all, and just say, we're trying to take the mystique and mystery out this and try and make it as nuts and bolts, really, because again, I'm an engineer. That's how I work. I like cars. I like building stuff, and this whole, feeling and trying to really be in tune with the market was really tough for me, and I had to figure out this checklist and these A, B, C, D. How do we get into a trade? How do we get out of a trade? And how do I make this as mechanical as possible? So if we want to open it up to any questions, Jack, let me know. I do have my charts open up underneath if anybody has anything. All right, so let me kind of show you that. We can go back to the XLF because that one was kind of fun. So if we look here, and I wanted to show right here. So you guys see that price. We got our Moxie price triggered to the downside right there. You see how price continued to move up over this purple moving average right there. And you see how the Moxie indicator was below 0, inverse trampoline move. And what happened next? Boom, right down like that. And Hernandez, so I think it's a pretty good price as is. If you don't care about the rest of it, you can just buy the indicator. I mean, it's gonna come as a package, but you get the indicator, you get the scans, you're gonna get the class, you can use what you want. And Wayne, it's for Thinkorswim. So I think that a lot of people use Thinkorswim, and that's the bulk of our subscribers that we use and the people who sign up for our class. The other thing is that if you wanted to, let me get a new one here. If you wanted to sign up for the service, well, you can do simpler dot and then Moxie, and this is the trading service that I have. So it kind of depends on what you want to do, but simplertrading.com/Moxie, and you get the alert service that we do. But if you want the indicator, it's simplertrading.com/stocks. Now, here's another funny one. Has anybody familiar with the Tesla Cybertruck? So get this. So first off, here's the Moxie price trigger, right? Follow the moving average. Here's earnings. Popped on earnings. Continue to follow the moving average. That's what I'm talking about. And then what? Again, I was just laughing. I made a Twitter post. So if you guys want to see me on Twitter, you'll see that. There is the Moxie price trigger, which triggered just, I think, a day or two before the announcement and the show, the debut of the Tesla Cybertruck. And look what happened next. You know what came first, the chicken or the egg? It's kind of funny. And sometimes it's mind-boggling what happens in the stock market like that. Jack, for now, we only have it on Thinkorswim. So I'm sorry if TD Ameritrade doesn't operate out there. One thing I could say, because I think what the problem was is that like your financial account, if you can get a trial version or just the free version, the demo version of Thinkorswim, you're 15 minutes delayed, but you don't have to have it tied to an account, and so it's free, and you can still purchase the indicator that way and use it in that way. So I think that was one way, because I had somebody else either in Canada or some other place that they needed to be able to get around that situation. We do have plans, so Trader, we do have plans of getting it onto TradingView. I would like to get it on other stuff. And Myers, what are you talking about? Is there, oh, this one, that's the squeeze. So this is John Carter. He is the owner and founder of Simpler Trading. And his big claim to fame is the squeeze. So now that I'm with them, I like to use it, and this is what we're looking at. But yeah, I just have that down there. It's kind of my backup indicator to tell me when some high compression moves are gonna be happening. And this is the thing, is that the Moxie indicator does really well with other indicators. You know, it doesn't have to take over. It still does really well with other ones. Like, I like to complement it with this one in particular, the squeeze, because you can see here we had that was a squeeze, which means that there's a compression before price moved, and there's your move. It's a big one. Yeah, we're working on TradingView. We got to keep designing it, working on it, getting the bugs out. And no, I'm sorry, the squeeze does not come with the Moxie indicator. If that is something you're interested in, just go to simplertrading.com and you can purchase it there. So Frank, I do not have time for that. In fact, I need to get going from here in my time slot in about 2 minutes, because I am going to Cancun for a friend's wedding in 20 minutes. That's when the cab is coming. But if you want to see, how about this? I can show you SPY recently. We just had this. So you'll see here is our first trigger, and it decided to push just a little bit further. And then here is our second trigger, and you can see there's the big move down. So this is what we were looking at. This was our little holiday Thanksgiving push. I was like, guys, we were running ragged here. You see, that's when we got our Moxie price trigger. You can see price going up, 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 and the indicator going down, 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 down towards 0. And then we got one last little push for Thanksgiving. I was like, take it while you can, but you guys should start getting out. And then that's what happened. We got one more price trigger right there, and then you can see it imploded for a bit. So all I can say, guys, is the proof is in the pudding, and it's right there for you. Another one, if you guys want to find me on YouTube, you can look at me under Moxie Trader, M-O-X-I-E, and I'm on YouTube, and I actually made a video just recently about gold. I like to look at GDX, and you can see this is what I've been talking about. Is we had a double bottom here, we had positive divergence right there, and we had our Moxie price trigger right there, and so far it's been pretty good. Now, I know that there were some false ones in here, but you start figuring out which ones you need to believe, because this one still isn't really what I want to do for a long-term trade, but it came right down to this layer of support that I was looking at, and there was a little double bottom recently that I was looking at. I said, this is the one. There's something different about this, and this is the one that we need to be looking at. Yeah, what do you want to see? If you're wondering why there are multiple arrows, they all populate at once. This is just an anomaly with Thinkorswim. That's just how that works. But they all populate at once, and it just means right there that we're talking about. Chuck, you're right. So you can get the old TTM TTM squeeze on Thinkorswim. They have that since done some other ones, but yeah, it's out there. Let's see. So YouTube, I'm trying to think, what is it? /C/Moxie. Yep, there you go. So I've got a couple TV appearances that I've been doing recently and everything. No, Frank, they don't populate on Mondays. They populate when they cross. That's the whole thing, is that the arrows populate whenever the indicator crosses. It doesn't have anything to do about like a Monday or Tuesday. It's whenever the indicator does what it needs to do. And trader, I don't know what INSG means. Oh, is that the ticker you're talking about? I was thinking like Instagram or something. Yep, so there you go. Not my trade right there, because it got rejected by the 200, and then you come down here, there's your trigger, and there's your move. And then here, this is what I call a trampoline move. When price dips below the moving averages, but the indicator stays above 0, I call that a trampoline move. And so that's part of the glossary. It's part of the lingo that I use, and that's why I have that. So you get the let's see, go back to, there we go. So you go back here, you can go to simplertrading.com/stocks, and showing what you guys get, the part of this, the glossary. You're gonna get the checklist, you're gonna get the rules, you're gonna get the glossary, all that kind of stuff.
Thanks, TJ. Anna here. Thanks for your presentation. I know you don't have any more time with us, so have a great journey to Cancun.
Great, thank you very much.
Thanks. And we're gonna move to our next presenter. Marina Villatoro. She's the CEO of the Trader Chic and has been day trading for years. Day trading isn't only a job, it's a lifestyle, it's a way of life and transformational journey. All you need is a trading plan and the right mindset, your laptop, and the desire to work 2-3 hours a day. Hello, Marina. Welcome to the show.
Hi, everybody. Hi, Anna. Thank you so much for having me.
Always. I'm going to make you an organizer that you would see all the attendees' questions, and I'm going to give screen over to you. I know your presentations include a bit information about yourself and your background, so I'm going to just give screen.
Okay, can you guys see my screen?
Yeah.
Okay, awesome. Great.
Okay.
Hang on, let me just do a quick organization here so that I have everything ready for you guys. Hang on one second.
Perfect.
Okay, hi, everybody. Thank you so much again for having me and for actually being here. That is really cool that you guys are here to watch all of us present today, and I am here to help you guys with any questions you have, and yeah, just to have fun. It's time to have some fun with trading. I would love to know where you guys are from, because I don't see that in my question in the chat room. So if you guys want to just let me know, say hi and where you're from, that would be really, really awesome. And I'm going to tell you in a little bit where I'm from and kind of my own background. So let's have fun chatting. Okay, guys, I want you to be here. I want you to participate. From India, I have somebody here from India. That is super cool. From Canada, from Seattle, we have people from everywhere. Lots of Canadians and US and India. Any other people from other countries? Oh, the Netherlands. Very sweet. Czech Republic. Very, very cool. All right, well, I am so excited that you guys are here. Hi, Herb. You are from Florida. Great to see you guys here. All right, so I am Marina. I'm the trader chick. This is me right here. And today what I want to go over with you guys and kind of help you spot and understand our breakout trades. I have always found that breakout trades for me particularly have been one of my top trade setups, and they're not too difficult to spot, right? So, but if you don't know what you're looking for, it'll be hard for you to understand what to look for. So today I want to go over all of that, right? Basically, it comes down to understanding the different market movements, understanding indicators, how to use them, and understanding what breakout trades are, and also scalping. I personally found that scalping is the way that has helped me. And I want to be able to kind of explain that to you as well, because with scalping, you are more focused on the quicker targets, which actually gives you those confidence boosts, which is really what trading is all about. At the end of the day, no matter what you're doing, if you're not doing it well, your confidence goes down, right? And that kind of affects the rest of you. But with trading, what could be really well done is if you do hit those smaller profits, it doesn't even matter about how quickly it is that little boom, I guess, to your confidence, kind of making you see that, yes, you can do this. And let's be real, trading, there's so many times that we could get so negative and go into the wrong space in our minds. And it really doesn't even have anything to do at the end of the day with the capital that we make as much as with the decisions that we end up making. And that's really what it boils down to, is the making of the right decisions. And the more decisions you make correctly, the more you could continue trading, the bigger position loads that you could have. So that all affects it, right? It's a domino effect. So today I want to talk about all of that with you guys. So just a quick intro. I am Marina, the Trader Chick. I am an expat living in Antigua, Guatemala. This is my family. I am married to a Guatemalan. That's why we are in Central America. So I am trilingual. I was born in the USSR, and 41 years ago, I arrived to the United States as a refugee from the USSR. This was during the Cold War. So I speak Russian fluently, like Anna. Actually, I was born in the Soviet Union, but in the Ukraine part, which back then spoke only Russian. Today, they speak obviously Ukrainian and Russian, and Anna is from the Ukraine, so we are connected in that way. So I obviously speak English fluently because I arrived to the US when I was 6, so it's pretty much I call it my mother language, even though it's not my first language, but I was raised in the US, so in that respect. I have now been living in Central America for over 18 years because we first lived in Costa Rica, and then we live in Guatemala, so I do speak Spanish fluently. So I'm also a traveler. I say this not being like, oh yeah, I travel these places, but there's some people that travel isn't a luxury, it's a necessity. And if I don't have my travel, it's hard for me to do things, right? So it's a necessity for me. Interestingly enough, I actually met my husband 3 hours into my Guatemala trip. I was backpacking for a year and a half, and that's kind of the reason why I got stuck in Latin America. My goal was to travel the world. But I find that travel opens our minds in ways that no education or videos will ever do. And it's just a part of me. I don't know if it's because I moved to the US when I was little, who knows, right? I don't want to get into that mindset, but it is an absolute necessity for me. I'm also, since I am an entrepreneur, I started teaching entrepreneurship class at my son's school. Basically, it was my son. He's the one in the orange shirt. It's his class because I feel that school limits us in many ways, and entrepreneurship is such a creative way. And to be honest with you, day trading is kind of like entrepreneurship. It's like solopreneur, right? Because you are working for yourself in your house. And it's really, you are in control of everything. So you cannot say, oh, this happened because of that person or that person. No, it's you. So it's very similar, right? I also organized a TEDx last year with the kids class. My son is right here in the middle. I don't know if you guys could see him in the gray shirt. And before I became a day trader, like full on, I was a fitness instructor and a travel writer. And I actually still have my travel site. Like I said, everything in my life has to be around for me to be able to travel. So I started a travel site 11 years ago before I began trading. And even though, it's part of my life and I write all about our travels, it became kind of stagnant for me in a way that this wasn't the only thing I wanted to do. And I've always been interested in the financial markets. So 8 years ago, a little bit less than 8 years ago, on my 40th birthday, I just said, this is it. I'm going all in. And I decided to just go crazy with my day trading and I signed up for academies. I literally devoted myself to day trading. And so from there, so it's been like almost 8 years. And the first 2 years, I will be really honest with you, it was insanely challenging for me. I joined these academies and trading rooms, and none of them, they taught me their strategy. So if I wasn't looking for what they were talking about, I wasn't, I didn't have any grasp of what's going on. And what I realized after being in trading rooms and listening to other people saying, oh, this is a great trade, get in, or wow, this is where you have to set up. And even though you don't know what you're looking for because you're looking for something that they are telling you is the right thing to do, it's kind of like when you're sitting in a car and somebody is driving for you, but you're pretending to drive, right? I don't know if that metaphor makes any sense to you guys. Another good example is if you buy a keyboard and you want to learn how to play the piano, but all you have to do is press a little button and there's this tune going on for you, and you just sometimes hit a random key on the keyboard and you pretend that you are part of that ensemble when you're not, right? You're just kind of getting in and not really sure what you're doing. And that's what I found myself to be like. I found that I was just watching for their strategies, for their setups, and every time they mentioned it, it was already, I was looking for it. I didn't fully understand. I was chasing these trades. And anyways, at the end of the day, I ended up losing a ton of money. I never fully understood what was going on. I kept on asking, can you please just give me like the basics? What I don't understand. What do you mean by divergence? What do you mean by where I don't see that support area? And the majority of the times people were just like kind of brushing me off because it's such a basic thing to know, but no one teaches that, right? So about 6 years ago, I'll never forget, it was in April. I lost almost $3,500 in 5 minutes. I was chasing trades, and then of course, even though I pretended to have a risk in place, my ego would not permit me to admit that I was wrong. So instead of just getting stopped out and getting into another good decision, I was making horrible decisions. I removed my risk. Anyways, all this happened and I literally emptied my account within 5 minutes. And this was already after me emptying out several more accounts before that. And I was laying on my floor in the bedroom. I mean, I felt so defeated at this point. I was giving 2 years of just not doing it properly. And my husband walks in and I am face flat on the ground and he's standing over me and he's like, why are you doing this to yourself and to us? I'm emptying our accounts. And I just look up at him and you just feel so helpless. But, instead of just stepping away and giving myself time to really consider what's going on, I went in for 2 more days and revenge traded, and I ended up losing another $2,000. And that's when I finally decided, no more. I gotta step back. So obviously everybody who I knew was saying, this is not for you. You gotta quit, stop, blah, blah, blah. And I'm sure all of you guys who are trading, you guys understand this, but there is something about day trading that just keeps you coming back for more. And it's like, I don't know, I want to call it an addiction because I don't think it is an addiction as much as we know deep down inside that we can do this. Other people are doing it, so we can as well. And that's kind of what I did step away for about a month, and I couldn't let go. I mean, I just couldn't. So what I finally decided to do, I promised myself I would not go live again. I went back to the charts and I stripped my charts of indicators. That was a issue that I didn't realize it was a problem at that point, but it was a problem for me at that point because I had way too many indicators going on. I was constantly in analysis paralysis, and I was also going after what the people's strategies, and the majority of the strategies were big targets, which look really nice on paper, but when you're sitting in there, big targets are really hard to get to. So I was having issues with getting the big targets and that didn't help me, right? So I went back and I stripped my charts, and then I decided to just understand the market, right? And this is what I want to talk to you guys about. The basics, understanding the market. You know, we could sit down at a piano and start banging at keys, but if we actually want to play the piano, we need to learn the notes. We need to learn the scales. And guess what? That starts from the beginning, right? Everything starts at the beginning. And the majority of times we overlook these beginning steps, especially in trading, because it's so easy to just hop in to the market and put money in, or I call it donate money to the market. So I went back and I just started to get to the basics, because funny enough, even though we know that there's 3 trends to follow, we completely underestimate the power of the sideways trend. And I'm not talking about the power as in making money, but as in a place that takes all of our money, right? So it's obvious we have the uptrend, and we obviously understand the downtrend. And if you're a day trader, intraday trader, you can make just as much money, if not more money, going in for shorting the market, right? So we understand more or less that there are these 2 trends, but the sideways trend, this one can really mess with your head. And the main reason why it does that is for several reasons. So if we look at this uptrend, right? The market's been uptrending, and all of a sudden now we come to this exhaustion area, what a lot of people understand, or a consolidation area, this pattern that isn't really going anywhere. It's kind of bouncing between these 2 points. It's like a channel, right? So what we are doing, we're sitting there and we're staring at this market, and this is what's going on in our heads, because we desperately want to keep going in, right? Because that's what our misconceptions, thinking that we have to be constantly in and out of trades. So when we're seeing this, this is what's happening. Okay, well, the market's been going up all day. It's got to go up. I'm going in for a long. Or another thought process that is happening, the market's been going up all day. It's got to correct. I'm going to go for a short. Basically, we want to predict what the market is doing without understanding what the market is doing. So why not actually, instead of thinking that the market is going to go long or if it's going to go short, why not just be like, you know what? The market is just right now in an indecision period. It is not sure where it's going to go. And I'm going to do one of the most important positions in trading, and I'm going to sit out and wait until I have confirmation as to where it is going. And that's what a lot of traders overlook. It's that understanding that you can and you must sit out at times, and that is the best position for us. And that usually happens when we have these indecision areas, and that is the sideways market. Okay. Now, another thing that with day traders, especially for intraday, they're trading, and scalpers especially, is we look for smaller positions. We look for quick moves of the market. So kind of going back here, we have this pretty strong overall momentum going up. Now, we could have immediate momentum. Immediate momentum are mini trends that we can access, and you at least do one strong trade off of. And we have to understand that. And when that mini trend ends, like it does right here, and continues up, that just kind of reconfirms that it was a correction for a little while, but it doesn't want to continue. And now I'm going to be looking for a confirmation to continue in the overall momentum. But we have to understand those things, right? So I want to get back to the consolidation areas and the transition areas, because first of all, if you don't understand what they are, you also cannot go for those breakout trades, right? And that's going to be part of what I'm going to show you today. So what is a consolidation area? Again, back to all of these are sideways trends. They could be mini sideways trends. They could be large sideways trends. It doesn't matter. At the bottom line, it's a sideways movement, right? So we have this. This is what it looks like. You have this uptrend. It doesn't matter if it's strong or if it's weak. But when you have this, when it starts to bounce between 2 areas, and we need to know our areas, everybody. You have to know the areas. I'm going to go into that in just a little bit. But basically, it's the resistance and the support area. Okay, this is another way of looking at it, right? We have this area. This is transition area. just because it transitions into a new trend. But bottom line is, it's still the sideways movement. It's still consolidation area, indecision, exhaustion, however you want to call it. These are what they look like, right? So it's great in hindsight when we've already seen it and understand, but how do we spot it? How do we know when it's happening, right? And that's really the most important part, is understanding when it starts to happen. And it really begins with your areas. Really, really important. And I say it here, if the market respects them, we need to as well. We are individual retail traders. We have zero control of moving any market at all. Unless one of you guys is here right now who is putting up millions of contracts per entry, sorry guys, we are not moving that market. And if you are putting those millions of entry, you guys shouldn't be here. You're doing pretty well. The fact that you even have that much money to put in, you're doing good. But if you're putting that kind of contract load in and you don't even know what a support area is, go and invest in a yacht, because you're just going to give that money away. All right, so basically, support area. What is a support area? It's the floor of the market, right? Basically, so this right here is also a support area. It is literally the pivots going down. In this case, it stopped this particular trend, but sometimes it could just be a channeling market, and it is the floor of the market. And the market respects areas. So that's why I like to draw it out like that, because it can hit this area again, maybe the following day, maybe in 2 hours, but when it does, you're prepared. Okay, resistance area. It's the ceiling. It's a ceiling of a market. You need to know this. And I know a lot of people are like, oh, I know what it is, but it's amazing that if you don't have somebody to be accountable to and say, hey, is this really it? And just kind of self-educating, you miss these really important areas. And these areas are like literally the do-re-mi's of music. If you don't know what the do re mi or the ABC of music is, chances are you cannot learn a Beethoven sonata, right? It's the same thing here. You cannot trade properly if you don't know what a resistance and a support area is. Here's another version of this. Okay, this is a tradable area. It's wide enough. You have mini trends in between. Again, I'm a scalper, so for me, the mini trends are really important, but I do look at the full picture. Now, when I start to spot these, right, how do I know to stay out? Because sometimes when you see that, you don't know that it's happening. And that to me is through divergences and through reversal patterns. So I use only 2 indicators, right? And I have a question here from somebody doesn't have their name. How much is the moving average? So these 3 lines that I use, those are my indicators. I call it one indicator pretty much because it is the EMA line. Oops. It's the exponential moving average. And I have 3 of them. I use a 52 period, a 20 period, and a 130 period. Now, with this, I also use MACDs. I am absolutely obsessed with the MACDs, and I trust them with my trading 100%. I find the MACDs to be one of the only non-lagging indicators. So when I am seeing pivots and divergences with the MACDs, I already know I need to stay out. Here's a perfect example. Look at all these pivots. Look at all this weakness showing here. Divergence. This is an indecision area. And I sit this one out because I need confirmation. Okay, this right here, this is an indecision area, right? Look at that divergence. Look at these pivots. They are, kind of hanging out here, but the MACDs are telling me you better stop because something is going to change. What is going to change? That is not for me, the individual trader, to know. I don't care. What I do care is the market right now is talking to me. The language of the market is saying, stay out, have patience, chill out. It's like driving a car and seeing a stop sign. You don't question it. You know that you need to stop because a higher probability of another car coming is there. Same here. The higher probability of it changing direction or stopping me out, whatever is there. So now I sit and I wait. I wait for a confirmation, which I will show you in a teeny bit. Here's another one, just a triple top with massive divergence, telling me stay out. You got to wait. You got to hold off and see what is going to happen next. And I do specifically that. I also want to show you this reversal pattern, head and shoulders. I know a lot of traders like them. I personally am not a big head and shoulders fan. However, they are just a reconfirmation for me, right? So what's a head and shoulders? You know, your market is going down. Normally you have, you know, this for now, and then you have a pivot that goes lower. So one or two things can happen. Continues on lower, and if not, it gives you a shoulder, kind of confirming to you that maybe right now it's not going to do that, and it might completely change direction. And we as traders have to respect that, right? So let's talk about breakouts. What are they? All right, so our market is headed up here, and all of a sudden we've got this massive resistance area, a ceiling, right? It's constantly hitting that ceiling. So I sit out until I have a massive boom telling me that it broke out. So another way of looking at a breakout trade is always if you're going in one direction and then you have resistance or support, it could be either one, and then it continues in that same direction. It's kind of like, imagine yourself getting in your car and going north, and all of a sudden there's construction and a detour, and it's sending you to the right, and then finally the detour is over, and then it sends you back north again. That's that breakout, right? So that's what it is. The trend is going in one way. All of a sudden you have this massive detour, flat, indecision. You have no idea where you're going to go, right? You might have to backtrack back home before you continue going north again, right? That's what a breakout is. So why would you, during that detour of you driving, would you actually just take any random street? Because you could hit, dead end street. No, you wouldn't. You would wait for a confirmation. You would wait for that construction sign saying, all right, you are clear to go, continue in the same direction, right? The market is the same way. The market, when it gives you these consolidation areas, this sideways movement, this resistance or support, that's your detour. It's telling you, stay on this lane until I tell you when you can continue. Sometimes, you know what, you can't continue. You just got to go home, and boom, that's changing the direction, right? So I don't want to get into that right now because we're talking more about the breakouts. All right. So that's pretty much what a breakout is. And I just want to put it all together. I do want to show you that I only trade on one chart. You guys do not need multiple monitors, especially if you're trading one instrument. It just becomes too chaotic. And you know what? Again, like I mentioned before, travel for me is a necessity. So I need to be able to take my day trading anywhere I go. And this is what my chart looks like. This is it. After my massive loss of almost $6,000, stripping my charts entirely, I came back to these, right? I came back to my, hang on a second. Right, so after I came back to the charts and stripped them naked, I realized I can't just get into trades on a naked chart. Okay, why? Why is that not possible? Because I will be honest with you, I cannot even tell you the amount of traders that pretend that they can. I personally use high-low bars. A lot of people use candlesticks. They see a big candlestick and they're like, oh, it's a candlestick. It's a big one. I'm going in. But why are you going in there? I don't know. It's a big one. So to me, doing that, and I've tried that, I failed, is imagine yourself archer, right? As an archer. Now, have you ever seen an archery competition? Are those people just walking around with their bow and arrows aimlessly on a field? No. They are standing from a very specific point and they're shooting at a very specific point. And that is either our target market, our target profit, which you guys have to have. You cannot just say, oh, it's going to go until I feel like I could get out. No, that's called greed, and you normally don't get out in time. You normally get retraced and stopped out. So think of yourself as an archer. Get into your place where you're going to take that trade from and know exactly where your first bullseye is, right? You could have multiple arrows and go for another bullseye after, but you have to have a first bullseye. So this is my EMA lines, is where I stand. And 1 point for me, you see these grid, 1 point is my first target area, always. Okay, let me see if you guys have any questions. Okay, so James, I do not use candlesticks. They are called high-low bars, and I use a tick chart. So what you're seeing here is I call it a 610 trade because this is off of a 610 tick chart EMA. I don't know if you guys know what tick charts are. So if you look at these balls here, my chart is set up that here, actually, let's do this. I don't know if I can do this. All right, I'll show it to you in a minute after I show you. So here is a breakout area, right? So here's my ceiling, my resistance area, and I have this boom, this massive, look at this movement. Look at this absolute beautiful movement. I have these lines because this shows me that there's massive strength with my MACDs. And here it is going back to one of my lines in the sand for my where I shoot my arrow from. Sorry, my doggy is going nuts. There's another dog outside. Okay, here's another one. You could do it through channels, right? Doesn't have to be only in that way, as long as it breaks through that strong area. Here it is. Look at that beautiful spacing between the MACDs. Gorgeous. All right, so as I mentioned before, I go for the breakouts, but you could also do when it changes direction. Remember how I said you're driving in the car? And, oh, hold on a second. Darwin, no. Forget it. Not worth telling my doggy to be quiet. So remember, you're driving in the car, you're driving north, and there's a massive detour, massive construction, or worse, an accident. And they push you all the way to another area and then finally say, you know what, we're sorry. You guys have to go back to where you started or completely change your entire route and then go. And that's what it is with a new change in direction. And that's how I also look at it right here, right? So now I'm seeing a change in reaction. Oh, it was something. Okay, same here, right? I've been going down. You can see here with my EMA line, it's a strong support area. Darwin, no. And then you, boom, you head out because it just does not want to let you go in that same direction. So this is when you transition and you use that support and resistance area for your benefit, right? And these are just another examples. You can use this mini support area for this breakout. Okay, but I also want to show you that you don't need a breakout. You don't need to have an actual area to show you that, like a support or resistance channeling area to change direction. And that all happens through here. I just wanted to give you guys a quick glimpse. What I'm going to do now is I want to show you what these areas look like. Okay, so here is an absolutely perfect example of a channeling market. This is the live market right now, right? So I've been going north, and all of a sudden I'm been told that there's a detour, there's construction, you can't go. And it's a really long, far detour, but I don't know where it's gonna go. I don't know. Right now, even with the MACDs, I don't like to pretend that I'm gonna guess because I don't know. I have absolutely no idea. So me, as a trader, this is when I sit and I just respect the areas and the market. And if I'm going to see it go up, guess what I'm doing? I'm going to be setting myself up and having my order waitings for that up. Or if it goes down, I'm going to sit there and wait for me to be able to get in on the down. And I just sit and then I wait. Here's a good example right here. All right, here we have a pretty strong support area, right? We've got 1, 2, 3, 4, 5, 6, 7, 8 hits, right? That's a significant support area, right? So it's been going down, the market stopped, here's my detour, and all of a sudden they open up the road and say, hey, go for it. And this is where I am sitting and waiting with my order waiting. I'm actually already waiting right here, but it never came back to my line in the sand. I have absolutely no divergence. I still have a massive area here, right? Look at that. So this is where I will be putting in my breakout trade. And all I'm looking for, because I'm a scalper, is 1 point, right? So it doesn't go up 1 point, it goes down and I continue on. And if I want to continue more, sure, then I look for more. But right now I want to focus on the breakout trades. And they are pretty often, they are pretty common, right? This is another one. We have a pretty big, significant channel going on, right? It keeps on hitting. Like I said, it respects areas. This is a couple of hours later. boom, this is when I'm seeing this massive confirmation. Going back to my first line in the sand, I am all over it because the probability of those breakout trades working out is super, super high. And I know that because of all my back tests. All right, let me go quickly into the questions. Hang on a second here. All right, so let me see what questions you have here. Does the dog trade? Oh, yeah. Yeah, he does. He trades. It makes my life very complicated sometimes. Okay, the support and resistance. Can you show the difference between your chart and the candlestick? Oh, right. Sorry, Gary. Okay, so just another quick, here we go. All right, so I use a 610 tick chart. You can see it right here. All right, so what is that? Do you see the numbers here? Every single one of these bars is 610 transactions. Like I said, I want to minimize and simplify my charts entirely. What does that mean? I do not want to have 1,000 indicators. So what this is, this tick high ball, I guess bar, it's telling me right here the volume. So on a time chart, you have to put in a volume because you don't know if there's a lot of volatility, if it's super slow. But when I have in real time telling me what is going on and how quickly those bars are moving, because the transactions, it's all about the transactions, right? Look, I have 25 transactions left, 15. I know in real time what is going on. And once it changes a bars, that's a boom, it just changed to a new bar. That means another 610 transactions is happening. It's pretty slow right now because it's lunchtime, right? And that's probably another reason why it's not getting out of this insane indecision area, which has been going on since pretty much open, right? I mean, not exactly open, but yeah, it's been pretty bad all morning, right? So we want to just now sit and wait, but that's what it is. So a candlestick, you might be able to do a 610 candlestick and then it just moves with the transactions. I prefer the ball because it kind of really narrows down. The candlestick is wider. It doesn't give me that precision that I am looking for. Hopefully that makes sense, Gary. Let me know if I explained that well to you. Okay. All right, so basically what it boils down to your trading at the end of the day, like I said, you have to back test, you have to know what's going on. And the question is, do you guys struggle with your trading strategy and plan, or do you not even have one? Because you'll be surprised the amount of people that don't even have one. Like I could tell you right now, we don't even have to be in front of my charts for me to tell you exactly my trading strategy and plan, because I know exactly what I'm looking for. And like, I want to go back to this really important aspect. Do you guys know what emotional capital is and the actual capital? Because so many of us sit down and like, okay, I want to make $100 today. I want to make $1,000 today. I'll be really real with you guys. That is absolutely ludicrous and absurd. It's like a restaurant opening up and saying, we're not closing our doors until we get 100 customers. What if there's a blizzard out there? So what are you going to do? You guys are going to stay open all the time? No, but what if you say, you know what? Every customer that walks in is going to get the best service and the best care. That's when you need to focus on the best decisions. And when you are focusing on the right decisions, your emotional capital, those little profit dings, those right decisions are happening, guess what happens? Your emotional capital goes up. You know what emotional capital is? It's you feeling good about yourself. That mental talk that we have, it's you having confidence in yourself and saying, I could do this, rather than I suck, I can't believe I screwed up again, oh my god, I'm a terrible trader, why do I keep on losing money? Guess what? Your charts finish, the market day closes, you get up and your emotional capital is at negative. You're taking it out on your dog, you're taking it out on your wife, you're taking it out on your husband, you're taking it on your kids. That is what emotional capital is. Who here understands that and remembers that? Okay, whenever you feel crappy about yourself, that does not get shut down when your charts close. That is continuing. And that used to happen to me all the time. And it was terrible. And that's why I found scalping, because I could hit those targets faster. Again, my trades have been back tested for years. I know what I'm looking for, and I hit those targets, even if it's a small one at $50. I feel good about myself. I feel confident. Okay, so when you don't have a trading plan and a strategy, that is really the difference between a profitable trader and one that is barely breaking even. Which one are you guys? Are you profitable and consistent, or are you winging it or praying, please, please, please go in my direction? You guys have to know the difference, okay? And that is what I teach in bootcamp for day trading. All right, bootcamp for day trading. That is where I teach you guys to own the markets, to read the markets, to know what they're saying, not depend on other people's strategies. Because when you start to depend on that, I'm sorry, that is not going to work. I'm so sorry, it's not. You have to own it. You have to read that market, right? You cannot sit and read a book while somebody's reading over you because you never learned the letters to put together, and that's what that is. You have to have a plan. You need to be prepared, okay? Normally, my boot camp is $297, but right now for you guys, it is 50% off at $148, okay? Right now, that's what you guys are getting. And you can use it and look at it at any apparatus, any device. Okay, so go here, guys, to thetraderchick.com/bootcamp. It's 50% off. But on top of that, this is what you guys get, okay? First of all, you understand how to read the markets. You learn all the different language. Plus, I know how complicated it could be setting up your charts. And I know personally, when I started trading, NinjaTrader took me like 3 or 4 months to learn. I had no help at all. And I cut that out for you. I have a tutorial that in 30 minutes, your charts are up and ready for you to go. So this is what I do. However, the absolute best part of this is that I offer you 1 month, one-on-one. You do the charts and you send them to me. Like I said, if you don't have a mentor, if you're self-educating, how can you possibly know if you're doing it right? How do you know that it's a reversal pattern you're looking at? How do you know if it's a support area? I do that 1 month, and that is included in the price. Usually that alone I charge for coaching. It is included for $148 in the chart. I have students from all over the world, so you do not have to be only US or Canada based. I have students everywhere. I don't have students from India yet. So that would be really cool if I could have somebody from India. I would love that. Here are some of my testimonials for you guys to read. And again, you could go and look more testimonials on thetraderchick.com. These are some of my students and what they have said after just taking the boot camp. I also have a futures ES mini course if you want to really focus on the E-mini, which is what I trade. And I am also giving 50% off of that as well. And that one gets 6 months. You get 6 months one-on-one with me for that. So you can start with the boot camp, which is 1 free month of working with me, lifetime access, one-on-one, 50% off, $148. Really, you can't go wrong. $148, and you will leave no matter what, understanding exactly what the market tells you, and that is for any market. If you want to get really deep into the market of the E-mini, especially the futures, I'm happy to work with you on that. I also have a really detailed course with over 10 trade setups for that. And I offer that at 50% off as well, 6 months one-on-one. Okay, you guys could contact me anywhere here, the Trader Chick Instagram, Facebook, or thetraderchick@gmail.com. So if you guys have any questions, please let me know. And again, you really don't want to be the trader that is guessing and self-educating and donating market money to the market, right? You want to have that support. And I'm offering that support, and I'm giving you the language that you understand. The market speaks to us. And when I realized that the market actually talks to us, everything changed for me when I started to really just listen to the market. And maybe it was because I speak 3 languages and recognize that this is another language. It's a language. And I realized that I have to listen to it. And once I started to, I have to say everything changed for me. Steve, the 50% off is going to last probably for the next few days. So I would definitely get on it. After that, to be honest with you, as of 2020, I'm going to have to separate my one-on-one mentorship and charge extra for that because I do get a lot of demand, and I just wanted to finish the year strong and offer that to everybody who I've been working with and you guys. But as of 2020, also, I'm still going to be selling my bootcamp and my E-mini course, but not with the one-on-one. So take advantage of it, guys, because honestly, You get me for 1 month. You will learn everything you need to learn about reading the markets. And if you guys want to go with the e-mini, I have 50% off of that too, and I'll be happy to chat with you. So you can go here, thetraderchick.com/bootcamp, or email me at thetraderchick@gmail.com. And thank you again for having me. This has always been super fun. Thanks. And next is Jerremy, I think, who is super fun. I actually get inspired listening to him every single time. So you guys are in for an awesome treat. Thanks, Anna.
Thanks, Marina. It was a great presentation and very generous offer. Please send our greetings to Darwin.
So I definitely will. He's barking again.
Thanks. See you again. Oh, yeah, we can hear it.
Yeah. He's saying bye.
Thanks. And now we're gonna move to our next presenter, Jerremy Newsome. He's the CEO and co-founder of Real Life Trading. He has one of the fastest growing audiences and websites on the internet and attacks the markets with an energy and humor that is truly refreshing. Hi, Jerremy.
Hello, Anna. How are you doing?
All great. How are you?
I'm doing fantastic. Thank you for having me here.
Yeah, it was quite a challenge to have you back on the show.
It, it was. You've reached out to me. You probably sent me like 400 emails, and I apologize that it took like 7 months to nail down a date, but we are here now.
It's my kind of like Christmas present from you.
That is very kind of you to say. Thank you.
So could you please take just 2-3 minutes and tell us about your background?
Yeah, absolutely. I appreciate you asking. And I do want to say before she goes, Marina, you are an amazing person. I loved your presentation. Thank you so much for the kind words and the shout out. A really quick about me background. I was born in the state of Georgia, which is south of Tennessee, which is where I live now. I started learning about the stock market at a young age, and I went to college to get a finance degree, and I was hoping that a finance degree would teach me about the stock market, but it did not, unfortunately. So I switched degrees from finance to business, and when I made that degree switch, I started asking other people a little bit about the markets to understand how it works, understand a lot more information. My boss at the time, I worked at an insurance company. His name was Rob Gwynn. Started teaching me a little bit about the markets, and that was 11 years ago. So since then, I've been full force pretty much every day, 7 hours a day, looking at charts, looking at screens, studying, getting an idea of how the market works, and just having some type of relevance of understanding how it moves so that I'm able to travel the world and spend time with other people who want to trade and want to understand the markets. It's a very exciting challenge, and that's what a lot of people are drawn to, is the challenge of trading profitably. And I think that's what I'm really good at, helping people kind of understand how to approach and understand the markets.
Can't wait to hear your presentation then. I made you an organizer. You will be able to see all the questions from the attendees. I'm gonna just give screen over to you, and we'll be back at around 10:15.
Oh, I love it. Okay, fantastic. So let me get my screen sharing turned on. I'm gonna share my screen. Beautiful. I got the questions here. That's fantastic. And again, great questions, everyone, so far. A lot of enthusiasm from this group, which is wonderful. And let me just make sure that my webcam works. I just want to make sure you guys can kind of see who I am. I don't have no idea which webcam just turned on. Let me see, because I have two. Oh, that one turned on. Hey guys, all right, so this is me. This is what I look like. This is my trading office, and we're gonna be looking at some charts. I just want to let you know I'm a real person. I'm here, I'm in the flesh, and I'm really excited to be a part of the Trader Expo. This is my second time, and it will not be my last time. Great professional team to work with, and really it's an honor and privilege to be here and teach with you and work with you. I do my absolute best to engage the audience as much as I can. So I want to make sure that we keep the energy high, because I know this is a webinar. I want you to be engaged, and I want us all to learn something impactful and new and enriching today that can help us make money going forward in the future using the stock market and using its phenomenal and bounteous opportunities. So just to make sure everyone can hear me okay, type in a 1 if you can either hear me or see me. We have a lot of people here in the audience, so thank you for everyone who is here. Let me see. Some 1s coming in. Oh, Steve, thank you very much for the 1. We got Myers throwing in some 1s. David, what about you, my good friend? Can you hear me? We got Jerry in the building. My dad's name was Jerry. Welcome, Jerry. Les is here. Mark Maurice is in the building. We got Stan. How's it going, Stan? Steve, Ashok, Gary Lynn's here. All right, wonderful, wonderful. This is going to be exceptionally great. Let me make sure I'll pause my screen share, my video share for right now. I don't want to scare everyone away. What we're going to talk about today is we're going to be discussing day trading. That is what we are talking about today, day trading. And my objective really is to kind of help you understand my process. And as Marina mentioned, I love the fact that she talked about having a trading plan, because that is so important in all of our trading, is having a plan. Not a goal for how much money you're going to make every day or every week, but a specific plan, something that you know what you're following, something that you actually have an idea of what you're doing before you do it. And what I'm going to do is I'm going to help you build a plan today in this webinar right now. I'm going to give you some exact rules that I follow. I'm going to give you some very specific setups. I'm going to share with you some risk strategies that you can implement. And I want to give you an opportunity to ask any questions that you have so that you can understand a little bit about the process and the procedures of how at least I trade, and then you can use that to further your trading as well. So first and foremost, here's the 2 objectives for day traders. Objective number 1 is finding a stock. Finding a stock to trade. And number 2 is do not lose a lot of money. All right. That's really the 2 objectives as a day trader. Now, let's talk just a little bit about number 2. Number 2, do not lose a lot of money. We get that. We hear it all the time. Awesome. I'll talk a little bit more about that later. Number 1, finding a stock to trade. This is something that is quote unquote the holy grail, right? Finding the perfect stock, finding the perfect trade, finding the perfect setup, finding the perfect gap. The opportunities in the stock market are endless. Opportunities are endless. That's the easiest part of the stock market. I love real estate, and it's something that I truly enjoy investing in, but finding real estate opportunities is the hardest part of real estate. Finding opportunities in the stock market is the easiest part of the stock market. Opportunities are everywhere. They are endless, they are boundless, they are limitless. Therefore, you should never run out of opportunities to trade. What I'm going to do is I'm going to build a plan that revolves around trading the same stocks every day. Type in a 4 if you would like to make your stock selection just a little bit easier every single day that you approach the markets. I'm going to help you build a plan where you can focus on the exact same stocks every day, because it does make it easier. All right. When you're trying to find the perfect trade, the perfect gap, the perfect setup, the breakout, the breakdown, the retest, when you're really doing all of these scans, it can initially become overwhelming. Doesn't mean it has to, but it can be. And if you are a new trader, type in a 2 in the chat pane if you have been trading for less than 2 years. I'm assuming I'll see a lot of 2s, but you never know. Zane, what about you, my good friend? Steve throwing in 1, so thank you for your honesty, Steve. I appreciate that. Trader is from Salt Lake City. Nice. I'll be in Salt Lake City in February, actually. So Steve is the only person who's been trading less than 2 years. Nope, there's another person. So one other trader has been trading for less than 2 years. There's Dan. So Dan mentioned he's been trading less than 2 years. I love it. Philip says, do you trade stocks only or options as well? I do trade options as well. Yep, great question. All right, so we have a few people who've been trading less than 2 years. That's great news. And for others who are watching, this I hope can be really helpful and beneficial for you, because if you have a less period of time trading, you want it to be as simple as possible. You want to remove as many obstacles as possible. You want to remove as many challenges as possible. You need to keep it easy. So what we're about to do is embark on a really easy journey about trading the exact same stocks every day. And here we go. What we're going to do is we're going to pick 5 stocks that are both optionable, volatile, and they move nicely every single day, and they have great liquidity. Now, I want to make very clear, you can end up trading any stocks that you want. Just know that these 5 do move quite frequently. They are very fun to trade. You can make money on them quite often, and they are very liquid, and again, they have weekly options. So here we go. Stock number 1, AMD. Stock number 2, Square. Stock number 3, Alibaba. Stock number 4, Nike. Stock number 5, Apple. There's your 5 right there. Easy, simple, 5 stocks. Boom. So now your scans are done. Your pre-market prep is done. All of the challenges of finding the perfect trade, the perfect setup, you can find plenty of opportunities going up or going down, trading options, buying calls, buying puts, selling calls, credit spreads. You can have an opportunity to take advantage of so many types of trading with these 5 stocks. And what I'm going to do is I'm going to help you build a plan about how to approach these stocks. And then after we build a plan, I'm going to give you some ideas and some insights on how to trade these. And I'll give you some examples today. And we will also look at today, but we'll also look at tomorrow and the next day and kind of give you some ideas and some insights on what I think they might do just simply based on the trade. So these are your 5 stocks. Go ahead and write them down. It can be as easy as this, ladies and gentlemen. Again, the stock market is as hard or as simple as you make it out to be. Always keep that in mind. It's as difficult or as easy as you want it to be. All right, rule number 1. So again, what we're doing right now, my friends, is we are building a trading plan. Okay, a plan is a set of rules that we follow as traders that we can implement at any given time, any given day, regardless if we win or lose. Our objective is to follow those plans. Dan says, is this being recorded? It is. Philip says, how about Amazon or Google? You can trade Amazon or Google, but they're very spready. The bid-ask spreads are very wide. The options I've found to be not that incredible, and they take a lot of trading capital or buying power. Great question. Rule number 1. What is your max loss per trade? That is a number that you should absolutely know. Mine right now is $500. You should know, what is your max loss per trade? That should be rule number 1. What I'm going to do is I'm going to show you how you can calculate your max loss per trade. It's very simple. First, you come up with your max loss per trade. All right, that is normally 1% of your account. Now again, it doesn't have to be 1%. It can be much less. Mine is less, right? But it can be somewhere, some variation of a percentage of your account. 1%, 2%, it can be 0.5%, it can be 0.4%, it doesn't matter what it is. You just need to keep it the same, all right? Needs to stay the same on every single trade for a period of time. All right, here's the formula. So let's say it's $500 and you divide it by the entry minus stop loss. And that gives you the amount of shares to trade. I'll give you a hint. I usually use $1 on Baba and Apple, and I usually go with around 30 to 50 cents on AMD and Nike, right? And Square, it can range, usually 50 cents to $1. So that's how much, that's usually around or approximately the risk profile that you can use on those particular stocks that we talked about. Okay, so $500, we're going to go back, we're going to give you some real life examples. I'll be showing you a trade that we placed today. It was, we exited just a few hours before this webinar began. And I'm gonna give you an example of how I found it, how we traded it, how many shares we played it on, where we got in, where we got out, and we're gonna give you some rules. So max loss per trade is rule number 1. What is your max loss? You need to have that written down and followed every single trade. All right, rule number 2. How many trades do you place per day? That needs to be a rule. I say 3. You get to choose, okay? But it should be a small number. Ladies and gentlemen, it should be a small number, because if you cannot profitably trade 15 trades a day, right, you shouldn't take 30 trades a day. If you can't properly and profitably take 3 trades a day, you probably are not going to fare very well with $10 per day, right? So that's something that's really important to understand. You need to have some type of rule, a quantitative measurement that you can determine, are you following it actively every single day? Because if you do not, then it's going to be very challenging and extremely difficult to profitably trade the markets consistently. You might be able to make some money on a day 1 or 2 days or 3 days, but doing it every single day for years, we have to have a certain set of rules. Tell me one profession that does not have a playbook or a set of rules. One profession. Well, I mean, can you think of one? Doctors have one, architects have one, chefs, right? It's called an ingredient list. Marina mentioned a restaurant owner in one of her examples. Everyone has rules in every environment, in every profession. So you should have a rule. Number 2, how many trades you take per day. That should be a small number so that you can figure out how well you're actually doing on your trades. All right, so here's some part of your strategy. Rule number 3, if the stock is gapping above the high of the previous day or below the low of the previous day, look to play the trade more aggressively. All right, so that's rule number 3. We'll talk just a little bit about that rule in a moment. So that's rule number 3. Very simple rule. Can't mistake that one. All right. Steve says Chuck Norris has no rules. I wish Chuck Norris would cry because it said that his tears cure cancer. Unfortunately, he does not cry. Rule number 4. So rule number 4, if the stock does not gap above the previous day's high or below the previous day's low, wait at least 30 minutes before taking a trade. So these are some very simple rules so far. We got rule number 1, we got rule number 2. Rule number 3 is very basic. Rule number 4 is very basic. If I was working with any particular trader at any point in time and we say, hey, how did you do as a trader? And I can find out very quickly, are you following your rules or not? Because they are written down, they are structured. I can generally determine immediately if you were able to follow these rules. All right, so what I'm gonna do is I'm gonna switch the chart really quick to Nike. All right, so here's NKE. Sorry, let me go back to SPY. I thought those notes would come with me. They won't. So how do I take these notes with me without making that too difficult? All right, we'll stay on this screen for just a moment while you guys are taking your notes, and then we'll go and look at some of our list, AMD, Square, BABA, Nike, and Apple. We'll go look at those. So we'll continue to build out our rules. We'll continue to build our plans. We have 4 rules so far. Here is rule number 5. Rule number 5. If the stock is gapping up more than 2%, wait for at least 1 hour before buying it. All right, so that's rule number 5. So this is what's referred to as a caveat rule. All right, you have a very specific, okay, if it's gapping above the high of the day, then you can be more aggressive. Got it. But if it's gapping up more than 2%, wait at least an hour before buying it. And that's very frequently because blue chip stocks will fade when they gap very frequently. All right, they very frequently fade. Now, I'm gonna give you 2 or 3 last rules. So here's rule number 6. Again, this is a trading plan that you could write down, that you could use, that you could implement on a day, 2-day basis.
Hey Jeremy, sound gone. Could you please check your mic? Because I see some complaints like there is no sound.
Sounds. Can you guys hear me now? Testing, testing.
Yeah, all good.
Weird. That is very strange. I'm glad I'm back. I'm glad you guys are paying attention. All right, so what I'll do is I'll just kind of reverb what I was mentioning. No big deal. Thank you guys for letting me know. I really, really appreciate you guys giving me feedback that the sound broke down there. That's fantastic. All right, so back to kind of what I was saying about this particular plan. Rule number 6. Rule number 6 is just a guideline for what we want to do, because it helps us understand if we're going to be bearish or if we're going to be bullish. So for example, on rule number 3 is just the speed at which you're going to take a trade. Rule number 4 is a very specific numeric type of trade. And rule number 6 gives you an idea of where and how you're going to be playing it, if it's bullish or if it's bearish. So if it's above the moving average, then you're going to play it one specific way. If it's below the moving average, then you're going to look to play it bearish. That's it. So let's go look at Alibaba. Sorry, let's start with AMD. AMD is the first on the list. So we're going to pull up AMD. We're going to go to the hourly chart. And I'm going to turn on the 34 moving average. All right, so this is the 34 EMA. The 34 EMA is this green line. So this green line on your screen that you can see, that is the 34 EMA on an hourly chart. All right, beautiful. So if we have a 34 EMA and we are above it, how are we going to be looking at playing AMD? The answer is bullish. Okay, cool. So we're looking to play AMD bullish. That's it. That's how we're looking at playing it. We know that we're going to look to play it bullish because it is above the 34 EMA. All right. So now what we're going to do is we're going to go back in time just a little bit to clarify, did AMD gap above yesterday's high or not? So here's the daily chart. And what we're going to do on the daily charts, I'm going to go back in time by one candle. All right, so here we're going to go back in time by one candle on AMD. So the high, ladies and gentlemen, of this candle, the high of this day, which was yesterday, is 39.82. That is the high of the candle, 39.82. So if AMD opens above 39.82, we're going to be looking at playing it more aggressively. Type in a 1 if you guys remember that rule. If it gaps above the previous high of the day, we're going to be looking to play it more aggressively. This is how you define more aggressively. Rule number 7. More aggressive trading is done on a 3-minute or lower chart. Rule number 8. If it is a white candle, I'll just say bullish. If it is a bullish candle gapping up, buy a pullback. Rule number 9, if it is a bearish candle gapping up, it's okay to buy a breakout. There you go. Again, some very clear, very precise, easy to read rules. This is what is called a trading plan. Having some rules that dictate what you do, when you do it, and why specifically you do it where you do it at. So we mentioned if the stock gaps above the previous high of the day, you're going to play it more aggressive on a 3-minute chart or lower. And if it is a bullish candle gapping up, which is a white candle, then you're going to be buying a pullback. If it's a bearish candle gapping up, it's okay to buy a breakout or to play the breakout if you're going bearish, right? You're shorting it if it's going down. So if we go back to the hourly chart, we'll see that AMD, right, is above the 34 EMA, and at open, it was gapping above the high of yesterday. The open of today was 39.95. So what we're going to do is we're going to go and now zoom into a 3-minute chart, and we're going to talk about kind of a play-by-play standpoint of when you would have played AMD today. All right, so we're going to go to before market open on AMD. Let me turn the extended hours on. So we're going to go before market open on AMD. So here is before market open. This is the 3-minute chart. So as I mentioned, you can go 3-minute chart or lower. Okay, so 3-minute chart or lower on AMD. And here's kind of the goal. The goal of AMD, as I mentioned, is to buy a pullback, buy the retest. So you can actually see right before market open, this is 3 minutes before market open, AMD has pulled back with a nice lower shadow. So we're looking for a rotation like this. We're looking to buy a pullback. Where can we buy a pullback? The high of the day. High of the day of yesterday. That's the same exact price that we were discussing just a moment ago that we would want to be getting into the trade. So high of day pullback, again, you want to buy it as low as you can. So this would be your limit buy. And then you would put your stop below some pre-market support. So what you'll notice is this will be your stop loss. Let me clear all the lines for just a moment. All right, I'm going to clear all the drawings. So what we have here on AMD is we have a setup to buy off of the high of the day from yesterday, and we have a stop loss 30 cents away, which is the average stop loss that I use on AMD. So if anyone wants to remind me, what is the formula to calculate our risk? 500 divided by the difference of the entry and stop. That's the formula to calculate how many shares you would buy in this particular example to know precisely and mathematically that you would lose $500 on this trade. So $39.83 minus $39.53. All right, that's 500 divided by 30 cents, and that's going to give you a very specific number. Who wants to give me those numbers? What do you guys think? I have the calculator out in front of me, but who wants to participate and give me the number that would qualify as on AMD? 500 divided by 30 cents. What do you guys think? What do you guys think? What do you guys think? Who has a calculator? Let's do it. Man. So if I was live in the room, I'd be handing out cash right now for whoever could give me the fastest answer, just to make sure you guys have calculators out in front of you. 500 divided by 30. Steve is the first one to get that correct. Anyone else want to take a shot? Steve is absolutely correct. Well done. All right, Brian. Nice job, Brian. Now, I know that seems basic, and it should be basic, because this is now, ladies and gentlemen, how you can calculate an exact amount of shares that you can buy to have a calculation of risk. Very few traders know how to do this adequately. Most traders will randomly buy an amount of shares because it's based on a feeling of their trade. I think the stock will work out, so I'll buy 500. Or, you know what, I'm not super confident on this trade, so I'll buy 200. Or I'm really, really confident on this trade, so I'll buy 3,000. And the crazy part is if the other two trades worked, the one they weren't confident on and the one that they were semi-confident on, if those two worked, but the one that they were very confident on did not work, they would be negative. They would be losing money, even though they had a win-loss ratio above 60%. This is how you keep your risk the exact same. So this would be a limit buy order at the high of the day on AMD. This will be a limit buy order in your broker for 1,666 shares, and this will be your stop loss of 1,666 shares. Next candle that comes in, there's the pullback, my friends. So yes or no, would we have gotten triggered on AMD on a pullback? Because remember, we talked about that in a previous rule. If it is a bullish candle gapping up, which this is a bullish candle gapping up, then you're looking to buy a pullback. The other rule was if it's gapping above the previous high of the day, which AMD is gapping above the previous high of the day, be more aggressive. Philip says, so your account would have to have about $64,000. That is correct. Yep. So again, as you mentioned, Philip, on this particular example, if you're doing 1,666 shares, right, we talked about the risk being around 1% of your account. So if you have a $50,000 account, $50,000 on margin for day trading is actually $200,000. So if you're trading this on margin, you shouldn't have an issue buying $64,000. If you're trading with options and you want to have the exact same risk, you would do 16 contracts. That's why it's incredibly important for any trader ever, if you're using margin, to make sure that you have a risk calculator and you know exactly how much you're losing if you are wrong. Again, this number can go down to whatever number is comfortable for you. If $500 is too much, lower it to $100. If $100 is too much, lower it to $20. It doesn't matter. The math works the exact same way. It's a very good question. So in this particular instance, you'd have gotten filled on a pullback on AMD. Again, playing it more aggressive since it is a white candle gapping up. And here are some other rules. Ready? Rule number 10, when you are in a trade, do not move the stop for 30 minutes. Very easy rule, very hard rule. Very easy to write down, very hard to follow. It scares a lot of people. But don't move your stop for 30 minutes because now I can quantifiably measure and determine if you followed that rule or not. Rule number 11, if you are playing a bullish candle gapping up, aka a retest gap, look to exit when the stock makes a new high, pre-market high, or hits resistance. A good goal is around 1.4 R's, or 1.4 times your stop value. So your stop value in this example is 30 cents. So again, this is all basic first grade math, ladies and gentlemen. First grade math for the win. But 39.83, 39.53, that is 30 cents of risk. And if you multiply 30 cents times 1.4, you come up with a number. That number is 42. 42 cents plus $39.83 equals 40.25. So this would be a target that you would have on AMD, $40.25, which you'll notice is actually also a pre-market high. So this is a really, really good spot for AMD to do its thing. And now you wait 30 minutes. So you walk away from the computer, you do whatever you want to do, but 30 minutes goes by, you let 30 minutes go by, 30 minutes has gone by on the trade, and you'll notice that you got very, very close to your target. Pennies away. So now, after 30 minutes has gone by, you move your stop. So now it is relatively and almost mathematically impossible to lose more than your initial risk. Right? So after 30 minutes, right? You followed your rule. You move your stop above or below a recent pivot, depending on, again, what time frame you're trading. If you're trading bullish or bearish, you increase your stop. In this situation, we're putting it right below the low of the most recent move. And guess what? After we move the stop once, that's rule number 12. Rule number 12. After you move your stop once, wait another 30 minutes to do it again. Again, very basic rule, very easy to write down, pretty hard to follow. So we still have our target. 30 minutes is going to go by. So here's another 30 minutes, and you'll notice we got very, very close to getting stopped out on AMD. Didn't quite happen, but we got close. Steve says, why 30 minutes? Why not 30 minutes? There's no exact scientific answer to 30 minutes, Steve. It works with any amount of numbers. It could be 40 minutes, it could be 35 minutes, it could be 28 minutes, it could be 46 minutes. Just pick a number and then go with it. I say 30 minutes because it's a half hour. Most people do a lot of things in half-hour increments. It's really easy to calculate, really easy for people to do the math in their brain. 30 minutes from now is what time, so they kind of know. It's a great question, but 30 minutes just seems like a really basic rule of time that a lot of people can subscribe to. All right, so after 30 minutes, we've moved our stop once. We can now do it again. If we want to increase it again, we would now take it higher and put it below this candle, below the most bullish candle at 9:15. We wait another 30 minutes, and then we're going to come up with the next rule. Oh, almost hit our target again. So here's final rule number 13, and I'll go show you a trade on BABA. Final rule: if you have been in the trade for more than 1.5 hours and you did not get stopped out, or you did not hit your target, but you are profitable, exit the trade. Boom, ladies and gentlemen. Gorgeous rule. This is a fantastic plan. We have 13 rules in place, and this one is a beauty. So if you've been in the trade for 1.5 hours, you have not hit your target, which we got very, very close to our target on AMD. That would have been a great win. We did not get stopped out, which was a great thing that we didn't get stopped out. We got close, but it didn't quite happen. And we've been in the trade now for about 1.5 hours and some change. If you're profitable, take your win, move on. That's a very specific, very realistic, very user-friendly trading plan. Let's go look at one more on Alibaba. So Alibaba, this is one that we played today in my morning day trading room, and we're just going to talk very clearly about it, very simply, and kind of discuss what we're doing from here. So, ladies and gentlemen, yes or no? This is a bearish candle gapping up. What do you guys think? Bearish candle gapping up on Alibaba. Yes or no? What do you guys think? What do you guys think? It's a really easy one to type in the chat pane. It's either 3 letters or 2 letters, YES or NO. Bearish candle gapping up. What do you think on Alibaba? This is today. No, you guys are scared? No answers? The answer is yes. It is a bearish candle gapping up. This is the bearish candle right here, and it was gapping up from the close of yesterday. Bearish candle gapping up. Now, here's a second question. Let's see if you guys can get this one for me. Yes or no, did Alibaba gap above the high of the day from yesterday? What do you guys think? Did Alibaba gap above the high of the day from yesterday? Yes or no? Hey, we got some yeses on this one, and they are correct. All right, beautiful job. Well done. Rick is correct. Steve is correct. Myers is correct. It did indeed gap above the high of yesterday. So again, with a yes or no question, are we going to play Alibaba more aggressive? What do you guys think? Are we going to play it more aggressive? Yes or no? The answer is yes, we will. because that was part of our plan. If the stock gaps above the previous high of the day, then we're going to play it more aggressive. If it's a bearish candle gapping up, we're going to be totally allowed to take a breakout. So let's go into a 3-minute chart on Alibaba, and we'll talk about exactly how I played Alibaba today in the morning day trading room. So let me minimize this really quick. I know I have a lot of drawings on the screen, so I'm going to clear this up for you for just a moment. All right. So on Alibaba, this is, again, we can look at the hourly chart really quick just so you guys can see that we are above the green line, right? We're above the 34 EMA. So we know to be bullish. That part checks out. No worries. We're gapping above the high of the previous day. It's a bearish candle gapping up. We know to be more aggressive. And as I mentioned, to be more aggressive, you can play this on a 3-minute chart. So here's how we played Alibaba. So our bullish entry was 197.34. My original stop loss was, as you can see potentially on the screen, let me put it down here. See where it says old stop was 196.34. Who wants to do the math for me on that one? What's the difference between 197.34 and 196.34? So what I'll do is I'll turn off the pre-market just so it is a little bit more clean and clear for you. So a little bit more clean and clear. This is where we were getting into the trade, 197.34, and the stop loss was 196.34. Who wants to venture a guess on the difference of those two numbers? Again, this is first grade math, boys and girls. Every one of you knows the answer to this one. 197.34 by 196.34. The reason I'm really harping on this is because this is how professional traders calculate risk. No guesses? Stumped? All right, I will help you out. 197.34 minus 196.34 is $1. That is $1 of price. $1 difference. All right, not a trick question, Steve. $1. That's the difference between 197.34 and 196.34. So if you remember the risk formula, it should be really easy to calculate whatever risk you would have on this trade. Right? If your risk is $500 per trade, then you would have 500 shares on this position. If you have $200 risk per trade, your risk would be 200 shares on this position. If you have $1,000 risk, then your shares would be 1,000 shares. Very easy, $1. 197.34, and the original stop was below the low of the day. So here's my offer, ladies and gentlemen. I want you all, if this is kind of brand new information for most of you, hop over to my website, reallifetrading.com, and click on this free tab and click on day trading. I have a really cool program that is entirely free with no sales pitch at all that teaches you very similar strategies to the one we're talking about right now that you guys can check out whenever you want. It's entirely free, doesn't cost you anything. It took me hundreds of hours to build, to edit, to create, and to craft. So that's really my pitch. If you guys want to sign up, it's literally free always. Just put in your name, first name, last name, email, create a password, click join, and you're good to go. You can watch my day trading program. You can watch my futures trading program. You can watch my beginners program, intermediate, advanced. I also have tons of ebooks. So here's the 4 types of gaps. It seems that like a lot of you guys would love some information on gaps. That's a really good ebook. Candlesticks, right? Really, really great candlestick ebook, all for free. If anybody ever wants to day trade with me, you're more than welcome to. I do have a trading room in the morning and the afternoon. I have all kinds of really cool stuff that you guys can get involved on. Any questions for me, ladies and gentlemen, so far? That 45 minutes went by extremely fast. It always does. I love helping, love educating, and for many of you, I think I would be a great resource to at least help you a little bit on your trading journey. So again, reallifetrading.com, click on free, brand new stuff, totally available for anyone who's watching this video anytime you want. Any questions, ladies and gentlemen? Steve says, cool, thanks, and great info. Yeah, my pleasure, man. Thanks for being here. Philip says, are the rules listed on the website? Class 4 of the day trading program. I go through some rules. If you want the rules that we discussed today, make sure to contact Investors Expo, get their recording that they'll most likely send out to all those who registered, and feel free to watch it whenever you get a chance. Yep, great question, and I hope it helps transform some of your day trade opportunities. Any other questions, ladies and gentlemen? Otherwise, that is about 45 minutes on the nose. Anna, do you have anything for me, Rockstar?
Nope. I love when you call me Rockstar. You have a very funny
well, you
story.
are. That's just your title.
Actually, I was just because, if you know, I'm originally Ukrainian, right?
Yep.
And I don't really know the English that good. You can see by my pronunciation. And you call me like, you're a rock, you know? So I asked, is it good? He said, yeah. And then after some time I told him, you are the rock. And he said, no, you actually can't walking around and call people just rocks.
That is a very funny story. I appreciate you sharing that with me. Oh, that is amazing. Well, thank you very, very much for your time and energy, Anna. And I really appreciate working with you guys. And I hope you have a great rest of your day and your presentations, okay?
Thanks. I hope we're going to have you back on the show next year.
Absolutely.
Have a great rest of your week, Jeremy. Thank you for your presentation.
You as well. Thank you.
Let's move to our next presenter, Simon Klein. Simon is the CEO and founder of TraderSmart, which has quickly established itself as a leader in trading education, training, and coaching services. Simon is a professional trader and trading coach with over 13 plus years of experience. Hello, Simon. Welcome back on the show.
Hi, Anna. Nice to be here again. Can you hear me okay?
Yeah, all good. Could you please take 2-3 minutes to remind us about your background?
I started trading. I guess I graduated University College London in, I think it was 1996, and my first job out of university was working for Credit Suisse in London. It was originally Credit Suisse Financial Products, and then I moved. I got offered a job after being there for some time. Met someone in the gym, and they offered me a job on the trading floor. So I moved to the trading floor, and then I eventually moved from London to New York. And then I moved back to London, and then I left the bank and started trading for I guess a prop trading firm. I did my Series 7 exams because I was trading in New York Stock Exchange, and I was taught to trade a specialist type of specialist system. So we were trained to see what the specialist was doing, and then we would kind of do what the specialist was doing. So if the specialist was buying, we'd buy, and if the specialist was selling, we would sell. That's what we were reading the tape. Now there was a problem with that as the years went on, and the New York Stock Exchange, or the specialist system, went part computerized. So the system that we were trading no longer worked. So it was back to the drawing board. And after many iterations and trying many different things, I finally settled on a supply and demand style of trading, which is what I do today.
Great. Did you had any mentors? Who have been your mentors, or you tried to learn everything yourself?
Say again?
Did you had any mentors on your trading?
Yeah. I had a number of mentors over the years, the different trading floors I worked on, and the traders there were mentors to me. So yeah.
Okay,
so
great,
what else?
I made you an organizer that you would be able to see all the questions from attendees. I'm gonna give screen over to you, and let's just make sure that everything works properly. Now you should be able to share your screen.
I've got to make sure I share the right screen. I think it's this one. And you see this screen?
Yeah, all good.
You see this one? Yeah. See my cursor moving?
Live market analysis, yeah. title.
Yeah. So it's slightly different to what I gave last time, but again, this presentation is different every time, even though the basis is there. I don't know what I'm going to say every time, and the markets are different. So we're going to dive into the live markets here. Am I ready to go?
Sure.
Okay, thanks, Anna. I've got about half an hour or 45 minutes.
You can go for 45 minutes. It's the last spot of the day. So.
Okay, marvelous, excellent. Okay, so welcome everybody, and my name is Simon Klein, and what we're going to do is a live market analysis using supply and demand. I'm going to share with you again how we're going to cover this. We're going to go through a little bit. I'm going to teach you a little bit about supply and demand. I'm going to show you some maybe misconceptions you may have with chart reading, and we're going to dive into the live markets and analyze what's happening now. So here's a picture of me giving this presentation earlier on in the year at the New York Traders Expo. And just a quick disclaimer, just bear in mind all comments I make are for educational purposes only. You'll know there's a high degree of risk involved in all types of trading, and we're not responsible for your trading and investment results. Here's a little bit about me, and Anna gave me a nice introduction, but just to let you know that TradeSmart is a trading education business that focuses on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. That's the key. So here's our agenda. That's the question, why am I always wrong? Again, many beginning traders seem to get into the market and it always seems to be on the wrong side of the market. Then I'm going to go over professional chart reading, and this you won't find in any book. A little bit about supply and demand, and then we'll dive into the live market. And I'll open up for audience questions and answers. I'm also going to make an offer at the end whereby you can take the next step if you're ready for it and you find that this is for you and this is maybe what you're missing in your education. So here's the problem. Why am I always wrong? So the market looks like this. You may have done a few courses on trading and you realize, hey, I'm in an uptrend. I just identify an uptrend based on, I don't know, the market's moving up and it's above rising moving averages, for example. That's not how I do it, but that could be the way that you do it. And so you take your first trade over here and immediately it goes in your direction. You're thinking, great, I can give up my day job. And then it turns against you and you don't really have a stop because you expect every trade to work, obviously. Yeah. And it goes down against you. And then you kind of hit the out button over here when you just can't bear the loss anymore and you're down $1,000, say. So you realize now the market's actually going down, not up. So you double up on the downside because you want to make your money back. That's what you're thinking about. I want to make that money back. This is every beginning trader pretty much. And so what you do is you hit the button over here on the sell side, you double up and the market starts to go in your favor and you're almost making, you're getting some of the money back and then the market turns around and goes to the upside again and you close out and this time you lost around $2,000. So you're down $3,000 for the day and then you jump in again on the buy side for your third trade, hoping to make it back, and that one turns against you and goes all the way down here and say you're down around $5,000 for the day. And you're thinking, what on earth is going on here? And you take a step back and you say, well, I'm buying up here and it doesn't seem to be working. I'm selling down here and it doesn't seem to be working. Maybe I should be, instead of selling down here, buying down here and selling up here. I learned about, something about support and resistance. Let's just join the highs here and we'll sell here. So I take my fourth trade, big time, trying to make everything back, and the market goes against me this time and doesn't go down because I thought it would, just like it did here, and it didn't do it this time. And then I take my fourth loss, and I'm down something like $10,000 now for the day and not feeling very good about myself. Now, if that is you, type a yes in the room. Now, if you can relate to that, type a yes in the room. What you may be missing is understanding supply and demand. Remember, they are zones, they're areas in the charts. They are not joining the peaks and the troughs. That's not how professional traders or institutional traders buy and sell. We buy and sell in zones. So I believe professional chart reading, you only need really four things, or really three things. You need to understand pivot analysis, and that's what we use, and that's not trade. Don't confuse that with trader pivots. That's not trader pivots. These are using the candlesticks alone to identify trend, and more about that later on. You need to understand where supply and demand is on on the charts in the markets, because that's where the markets are likely to turn. And you have to understand price direction. Which direction is price currently moving? And again, you won't find that in any book anywhere. And you have to be able to do this on multiple time frames. For example, you could be in an uptrend on the hourly chart, which is within the context of a downtrend on the daily chart. And the uptrend on the hourly chart may come to an end where the downtrend on the daily chart continues. And if you look at the bottom over here, I believe that the charts will teach you all you need to know once you have a framework for reading them. Many people are strategy based. Give me the next best strategy. And again, if you take the strategy out of the context of the market, you're missing something. It's probably not going to work in the long term, yeah, over time. So what you need to do is you need a framework in which to read the market. And this is that framework: pivot analysis, supply and demand analysis, and price direction analysis on multiple time frames is the only thing that you need in order to analyze any market that you can chart using Japanese candlesticks. Once you have that, you can understand, I'm going to show you examples of that, you can understand any market. And once you have an understanding of the market, for example, should I be on the buy side or on the sell side? Where do I get in? Where do I get out? When did the trend begin? When does it end? What's my expectation for the trade? If you can't read the market, having a strategy is not good enough. A strategy will tell you maybe how to get into the trade, how to manage your risk, where to get out, and that's about it. But how do you apply that strategy in different market conditions? That's missing in many strategies. They basically look for certain conditions that happen in the market out of market context a lot of the time. Now, not every strategy. Sometimes you can understand it within the market context. But again, if you want to understand, if you want to be in the game for a long time, it really is very important to understand how to read the market. And then you can build whatever strategies you want within that framework. So let's go and show you some examples here. So back to basics. Everyone knows, unless we've got some really new traders here, that this candlestick on the left-hand side is a hammer and the one is a shooting star. Let me ask you a question about these candlesticks. Is the candlestick on the right, the shooting star, is it bullish or bearish? Just type it into the chat room. I'm going to open up the chat room here. Let's have a look so I can see what you're typing. Just type in the chat room now if this candlestick over here on the right is bullish or bearish. Okay, thank you for typing bearish. Let's have a look. Come on, everyone type. Good one, Steve. Okay, Myers, good answer, both of you. So let's take it a step further, okay? Generally, this candlestick is bearish under certain conditions, where depending on where it's happening and what the context is, as we said earlier. This candlestick bullish under certain conditions, but actually this candlestick could be very bearish and this candlestick could be bullish. Now, Rick, you're saying bearish if at the highs. So let's have a look at an example here. Here's a candlestick. We have, this is on the hourly chart of the dollar Swiss, the Swissy. Here we have one candlestick, 1, 2, 3, 4, 5 hours up, and then we get a candlestick like this. Bullish or bearish? Rick, you said bearish at the highs. This is at the highs, correct? This is the high of this move. We got a candlestick like this. What's likely to happen next? Okay, so let's take a look. Most people think this is a bearish candlestick. I'm going to tell you in this case, Robert knows, it's a bullish candlestick. This is actually a bullish candlestick in this case. So let's have a look at what happens next. Market goes up a bit more. And this is how the market played out afterwards. So we actually had this happening in our trading room, and we actually bought and played this up to this level and beyond. So this is exactly how the market played out. So you have a candlestick like this. Most people think that because that's what you're taught. After a move up in price and you get a candlestick like this, the market should do that. That's what you think. If you're trained as a trader and you understand how to read the market, then you will never be buying. I mean, you'll never be selling this. You might not want to buy it, but you won't be selling it. And most often than not, this is going to continue moving to the upside. Now, let's go back to our context. How do we understand this? Okay. So if you understand this as a supply level over here, this candlestick cleared out the supply. There's no more supply. So why would it go down? There's no supply. And I'm going to go into that in a few minutes to understand exactly what supply and demand is and how this can help you understand. So if I look at what's happening beforehand, our price direction is to the upside. So we're going up. We just cleared out a supply area, and the momentum and the movement is to the upside, and we're looking like we're starting an uptrend. Why would you sell? Yeah, so that's what happens here. Now, I asked this question to a crowded room of traders at the New York Expo earlier on in this year, and almost everyone put their hands up because I can actually see them, and they said, this is bearish, apart from maybe one or two traders in there. So if you've got a framework for reading the market, then you can understand why this may be actually bullish. So if you start at the basics then and stay at the basics, you may understand this as a bearish candlestick. It's actually bullish in this case. So what is supply and demand? So everyone knows prices move higher where there's more demand than supply. Prices move lower where there's more supply than demand. And prices will move sideways when we have an equilibrium. That's general, nothing to do with, this has been around forever, yeah? And it plays out in the market exactly like that. So what moves the markets? Some people think it's news. Some people think it's, earnings reports. Actually, that could be causing the imbalances between supply and demand, but at a deeper level, what's really moving the market is supply and demand, the equation, between the actual relationship between supply and demand. As we said earlier, what causes that? Well, that's the fundamental question. And most of the time, if you listen to the news, they'll tell you the market moved up today because of, and they'll give a reason for it. And every day it's something other reason, because of some news, some geopolitical event going on, whatever, some economical event, anything. Yeah, but they always tell you afterwards. They have to give a reason for why the market moved. As a trader, you don't want to know afterwards why the market moved. You want to know what's happening now so you can take advantage of it and actually trade it. And do you know what the advantage of basing your trading on supply and demand? Remember I told you at the beginning that I started trading a New York specialist system of trading, and when the specialist system went hybrid, part computer, part human, the system that I learned to trade no longer worked. So it was back to the drawing board. But wouldn't it be good to learn something that will be around forever and you'll never have to learn anything else? Once you've got this framework, this will work now and this will work till the end of time, as long as we've got markets to trade, which will be to the end of time. So the advantage of this is this will never change. If you base your whole trading methodology on something that's timeless, then you've got a distinct advantage over anyone else that doesn't do that, because you're going to be here forever trading that way and you'll never need to change it. You'll never need to change the framework. You might need to adjust your strategies according to different market conditions, which is what I said before. You have to understand what the market's doing and then adjust accordingly. If you're strategy based, you have less of a finger on the pulse of the market than you should have. If you're market based, then you understand what's going on and you can bring different strategies into play in order to take advantage of the odds in the market. So what you're left to do is to identify supply and demand on a chart. Once you can do that, then you know the areas in which price is going to move from and to. So the chart looks something like this. So how do you identify supply and demand? So you're looking for turning areas in the market where you get potentially big moves. That's one way of doing it. Now, again, it's beyond the scope of this presentation to go into everything. It would take me probably around 10 hours to go into the nitty-gritty part of it. But basically, you're looking for how the market turns here, and this would identify a demand area. And for example, up here, this would identify supply. So how do you go about identifying turning points in the market? So there's the one caveat here is recommended that you do go through our trading program, but then again, it depends on how you learn. I'm going to share with you how you can get on board and really take advantage and come and join and trade with us live every day for a month for free. Yeah, and I'll show you how you can actually do that towards the end. So what I'm going to do is take you to the live markets now, and let's jump into the charts. So you guys are ready for that? Let's jump into the charts from today and let's take a look. So what I'm going to do is start off with the dollar. Now you can see I've got areas drawn over here. Now these are drawn before price gets to any of these locations, yeah, because this is what I want to know ahead of time. Where is price likely to turn? For example, we have a demand zone here, and you see the market's coming down now, the dollar index, into a demand area. You can see that this was a supply area that I had marked over here. We had 1, 2, 3, 4 days down. Look what happened when the price came back here. Yeah, and then we have this area of supply become demand, and once it pushes to new highs, I mark it as a demand zone in its own right. But you can see it broke down here, and this is what we traded actually on the short side yesterday and today. Yeah, as the market is actually currently pointing to the downside on the daily chart. So the odds are to the downside, but we've got to be aware that we're close to demand that may move to the upside here. And you can see we've also got demand here. Now let's go to a few other markets, and let's go, the euro is the inverse of that. Let's actually move to the pound. I'm going to show you something very interesting here. Now we pointed out this trade on the pound, right? This is the monthly chart right at the lows over here. You'll see the lines coming on. This is our demand area, and now we're coming into supply that's likely to break. Now, this is the weekly chart. You want to look at areas where you get big moves down and moves up. But look what happened here. We broke above this supply area and it became demand, and we based. Basing, as I say to my traders, we say all the time, and this is one of the key things, basing in supply is generally bullish. We said this is likely to break to the upside. We said that in our trading room before it happened, so you want to play on the long side. Come down intraday, how do we take a trade on that? So you can see there's a lot of areas here, but the beginning of the week, the first entry on that was over here on Monday, and then another entry on Monday later on here. I took this entry on Wednesday right here with a stop below, and look what happened. And then again later on entry over here, and notice these are levels of supply that broke and then become demand on the other side. Notice we hit it once, we hit it twice, and third time or fourth time here we break through. And again, this level we broke through becomes demand. This level broke through becomes demand. This level breaks through. That's why I left these lines on. I usually take them off now, but I wanted to leave them on to show you. Broke through, become demand. The market's clearly moving up. And remember, in upward moving markets, you want to buy pullbacks to demand as opposed to selling supply. Okay, and you can see that clearly here. This is a break of demand. A break of supply becomes demand. Break of supply becomes demand. Break of supply becomes demand. These are buy areas all the way up, and that's how you can get into a trade and add to the trade and really take some nice profit on this. But look where we're coming to. We're coming into a supply area, and you can see this here. Now, if the pound breaks above this area, it's most likely our next real supply area is up here. So we could get a run back up here as we come into the elections in the UK. That could very well happen. Just like Brexit, it came down. It may very well reverse and go all the way back up again. Now let's have a look. Let's jump down to the euro yen and actually show you a trade we took yesterday in the trading room on this. So if you understand, let's go again. This is demand. This is demand. Why? Because we pulled back and we had this nice strong move up. And again here, strong move up. This is supply, this area, because we dropped down. Hence, when we hit this area again, we drop down. So we took a trade the other day, yesterday, and let me show you what that trade looked like. And again, we take pictures of the trade. When we take the trade, this was taken live in the trading room. This was the entry on the trade. I haven't seen what it's going to do yet. But how do I take this trade? Well, if you understand the trend, you understand that this pushed up to new highs and pulled back and pivoted here and changed direction. So we wanted to get in here, stop below, first target area here, and we're looking potentially for this to continue moving up to this area on the weekly chart. But notice we're in supply here on the monthly chart. So let's have a look at what happened next. This is the first target area, was around 50 pips. around the 30 to kind of 80 area. And this is where I took my first target. And that was like, it happened during the day. It happened almost immediately, that we got an immediate push up. And notice how I'm playing to break above this supply area, because the trend's telling me it's likely to break, and plus also here. And then you can see what happened next after that. If we take a third picture, always what happened next, you can see that was the trade from here up. And you can see it's still kind of meandering around. It went a bit higher today and it's kind of chopping around in this area. So that's how you build up. And I have a strategy for doing this. This is the name of my strategy. This is the entry I took. Okay, let's go through a few other markets. Let's have a quick look at gold. I'll show you. This is one of the, very similar trade here on gold. This is on coming from a bigger time frame, and notice this is demand because we moved up. So the original trade on this one was last year, original long entry down here. We're looking to target this 1600 kind of area over here. The next entry was over here, and this was the target area. Why? This is supply. So you're looking for areas where the market tried to go up here and failed and dropped down and broke below all this area. So this is clearly where we have supply. So if you know when to get in, you know when to get out, then you can manage your risk, and you know where you put your stop, and likewise where you put your stop, then you can actually trade and read the market as it's happening. Now you can see what's happening intraday here is that we've reached, this is on the daily chart, we've reached an area where the market, again, just as similar to what we just showed you on the monthly chart, the market tried to go up, failed and came down. This is supply. So why did the market on the first time back here retract? Yesterday we had a move. You want to play on the short side. Okay. Let's have a look at oil. So oil, this we identified as demand. This pushed to new highs. So the market dropped hard into this area. This is where you want to be a buyer. There's your risk. There's your reward up to this area. And this was also a trade taken in the trading room. I think Mike took this trade on oil. Very nice trade. And you can see again, you just need to know the levels where you should get in and out, and you'll see the market. If you get good at doing that and identifying them, the market just turns there. Let's look at the E-minis. Again, if we look at, this is demand, price moved up from it. Look what happened when price dropped hard into this area. It bounced. Now, this is very interesting from a trend perspective. We just broke the uptrend. So we're going to see now if this is going to go up and turn, and that may put in a top here on the E-minis. But we notice from a perspective, we're still moving up, and notice how we move down to demand areas and was bought. Now we've gone below. This is also demand. Market tried to go down, went up, and then it did go down below here. So there's no real demand here anymore. We've traded through it. So what could happen is we may get a pullback down to this area if we're not able to continue moving higher. If the market fails to make a new high, we're probably going to come down to this area. So knowing ahead of time where your levels are and where you should be getting in and out, and then looking for, using a trading plan with a strategy in order to get in and manage your risk, that's what you need to do. Start off with reading the market. That's what we do every day in our trading room. We read the market, understand what the odds are, which side of the market we should be on, and then we trade it based on our trading plan. I've got a slightly different trading plan than Mike does, who helps me run the room, and other people may be trading on, for example, that are in the room, like Britt, maybe trading on the 5-minute entries. I like trading with 1-hour entries. Mike likes the 15-minute chart. So we all got different styles of trading within the same framework of reading the market, and we have an edge because we do that. So, and let's have a look also at Bitcoin. Let's look at Bitcoin futures. Again, this is a very interesting location at the moment. If we look on the monthly chart, we're in an area where we could actually turn to the upside around this 6,000 area. You can see we dropped down here on this time frame. We're getting very choppy now. Yeah. So this is a very important area because we could turn here. And if we do turn here and start pushing up, we could make the highs again. Okay. But you can see we're moving, how we move down. We've got supply above us on the smaller time frames here as well. Okay, so So that was a little bit about our live market analysis. So I want to share with you a few success stories. So we've got this trader over here, Jane, and she went from beginner to consistent profits in around 3 months. So just share with you what she says. I don't know how to begin to say thank you to Simon for having made such a big change in my life. In short, I've been trading binary options successfully when it was banned last December, so wanted to learn to trade properly. I contacted Simon after watching his Where is the Dollar Going Next videos, and I must add that they were so accurate, I knew that I had finally found someone who really knew what he was talking about. We chatted on Skype a few times, and I decided to join the trading room for a trial due to having a full-time job. Couldn't really join him during the week, but the few times I did, it was incredible. I just watched what Simon did, how he used the levels to place his trades. This was something completely new to me. After having only traded binary previously, I was amazed at what I saw. Simon contacted me again, and after the trial was over and after a few Skype calls, I did his pivot analysis training. That's how to read the trend. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-boggling. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the supply-demand levels, and adapt it to your own trading style. Be very disciplined, don't be greedy. Stop when you have made your daily profit and you will turn losing trades into winning consistently day in and out. Simon's training can be adapted to any market. I mainly trade the Nasdaq and oil futures. I use my own strategy based on Simon's education. I found the best thing was knowing what you were doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it is the best and only training to succeed with. So now you've seen a simple and powerful approach to reading the market. Take it a step further and learn how to read the trend using pivot analysis. So what are the benefits of knowing how to read the trend? You want to trade in the direction of the trend. The trend is your friend until the bend in the end. You'll know exactly when the trend begins and when the trend ends. Make sure that you're never fighting the trend. Make sure you're on the right side of the market, and you can use it to develop a profitable trading strategy or enhance an existing trading strategy. So here's my offer for you to take the next step. You can join my How to Read the Trend training session. I'm going to show you how to do that in a second. And you're going to learn exactly this, how to identify the current trend of the market, to analyze a trend in multiple time frames, exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. So here's what people are saying. With Tom, I wanted to say, I think what you teach in How to Read the Trend training course is brilliant. Before that, I had picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the charts. You are a mastermind. Francesco, when I first watched the How to Read the Trend module, I must admit that I did not appreciate the power of pivots and their interrelationship with supply and demand. Honestly, I thought it was more of a good education module for beginners, talking about what a candle is, and that of course I was smart enough to be able to read the trend already. Now, after having been a few days in the live trading room and seeing some pretty uncanny results from the past at least, my first week did not have much action per se. Something clicked. So I decided to re-watch the first education module. Now I can see that it is really a lot more powerful than it first appeared to be, and it is quite deep. Sometimes we don't see what is right in front of our noses, as the old saying goes. I would say now that I know things about reading the trend that I did not have a clue about before doing your first module. So the first thing I'm thinking is, why didn't I do this 25 years ago when I started? Marcus, Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. So this is what you get in the training. It's over 1.5 hours, and the value is $397. It's on demand. You can watch it as many times as you want. You get personal access to me. You can email me any follow-up questions, or I'm going to show you what you can do as well. You can actually join our live trading room for free if you take this offer as well. So if you join now, the regular price is $397. I'm going to show you how to do that in a second. Maybe I can put the link into the room. Let me just jump and put this link into the room, and then you can follow on with me for those of you who want to take the next step. I need to put it in the chat area. Let me see if I can do that. Okay. So this is the link. I've just put it. You guys see it in the chat area? So just click on that and you can follow along with me. So let me show you how to do it. So you click on this, or you go to my website over here, and you can see it on the side. It says how to read the trend on the main page, tradesmartforex.com, how to read the trend. You can click that. This brings you to this page over here. Now what you're going to do is click buy now, and it will bring you to the checkout over here. So what you need to do is use the coupon code 200, I think it's 200 off, and you click that, and you see you only have to pay $197, and you get put into a monthly subscription where the first month is free. You can cancel at any time, and then afterwards, instead of paying $497 a month, you're locked in at $297 a month in the live trading room. If you trade well in the live trading room, you'll probably make way more than that joining us. So, but you can cancel any time, but come in at least for the first month in the live trading room for free. We've got a nice group of people in there now, and you can join in with them literally starting. I mean, we don't have a session on Friday, but we'll be starting on Sunday. We have a session on Sunday, and I'm going to share with you that in a second. So go and fill in all your details, and once you hit this, you'll get sent an email with immediate access, and you can actually get started right away. And what you can do once you've got access, you can join the members area by clicking here, going to members, or clicking on the link in the email, or clicking here on members. Once you click on here, it will bring you to the training portal over here. All the training is in here, and everything to do with the trading room is in here, and you have to get access. There's also a help desk here if you have any issues or queries. You can actually click on there and ask whatever you want. So if you click on access now to here, you will get into how to read the market professionally. How to read the trend you can access from here, and it's the first session in how to read the market professionally, which is how to read the trend, and this is the first of this training. There's also how to run a trading business as well. Now, so that's everything you need to know about how to read the market professionally. You go and click on here, and you get the first session, which is how to read the trend over here. The trading room, you click on trading room over here, access now, and that brings you to the trading room. Now, the trading room, we have a live trading room. So you click on here, and it'll give you the schedule for the week. You register once. You also get an email 15 minutes before we start every day, and then there's a link. You just click and you enter. Once you've registered, all you need to do is click on enter room, and you're automatically in every day. If you miss the live trading room and you want to watch the replay of any session, we've got the replays over here, the latest daily. Plus we have a weekly preparation session where we set up our zones and we have a game plan for the whole week. So this is our weekly preparation session, which is a standalone subscription, but as part of this offer, you're going to get this for free for a whole month. There's people that have subscribed to this that are paying on a monthly level just to get these videos. They're not in on the live session because the weekly preparation session is just a recording. You have the latest weekly and the previous one. So this will you'll go through all the levels that we put and so you'll know where we're taking trades. If you don't trade the same instruments as we trade, then we're happy to look at other instruments, but you can use the general principles to apply to your own trading as well, what you'll learn in here. So that's that. And okay, and again, you can change your password over here. You've got a sitemap support if you need any. Okay, so let me share with you again. So you have to go to the link that I'm clicking that you've got in the room, and the coupon code is 200 off. Thanks for typing that in. And so basically the regular price is $397. The deadline's Saturday, December the 7th. At midnight, and again, we're coming towards the end of the year, it may be changing our pricing next year. You'll receive $200 off. And as I said before, there's a special bonus for everyone here. You're going to get 1 month free in the live trading room. Now, again, you're going to see us trade live. You can see us prepare on the beginning of the week, and you're going to see us trade live every single day, Monday to Thursday. How we prepare and how we use our analysis during the week, and you'll pick up a tremendous amount from that. So if you join now, how to read the trend is $397. 1 month in the live trading room is $497. That's a total of $894. Today, you only pay $197. That's it. So if you have any questions, be happy to answer them. So you can type them in the chat area. Let's have a look. Okay. Someone's asking, is that the right one? No, let's go to the top. Okay, someone's asking, can you use Thinkorswim? Yeah, you can use whatever trading platform you want. Let's see if we have any more questions. Okay, does anyone have any questions? So I know we're going to go over into we have something else now, Anna?
No, I see
Oh.
somebody asking, do you have a YouTube channel?
Yes, I have a YouTube channel. Okay, so this is in the, let me just click here. YouTube channel, you can get this also from my website. Let's go back to here. Go to my website, tradesmartforex.com. If you also, you can just type in, you can learn how to build a profitable trading strategy in 15 minutes here. I'll take you through the main points. So again, you're not ready for that and you want to start somewhere, start here. There's some free education here as well. YouTube channel you can get from here. You just click on that, it'll bring you to my YouTube channel, Facebook. Yeah. If you want to read other recommendations from other people that have gone through the training, you can click on here. And it's nice to say that the majority of the people that are actually going through or attracted to this are super professional people, usually the top in their careers. And I've got lots of engineers, doctors, lawyers, all sorts, business owners, entrepreneurs. So if you're willing to, if this speaks to you, the supply and demand, having a market reading based approach to trading, purely technical. I mean, I do come from a fundamental background originally, and that's how, I was in the office before the New York market opened, usually about 3 or 4 hours before, doing a lot of analysis and looking at different things going on in the economy, balance sheets, company earnings, reports, everything.
Well, I think you got for us a pretty good offer. So please just follow this link in there. And if you have any more questions for Simon, just follow his website.
I have one more thing that I almost forgot to share with you, and I want to share with you now because this is something that looks similar to what we just had. And again, you tell me how this plays out. Again, it hasn't played out yet. You see this bar here? Just based on what we did before, bullish or bearish, is this market going up or down? What's likely to happen next? Okay, so if you want, take a picture of this and see whether this is going to go up or down. Today, so far, we've gone up, you can see, not down. Yeah, so the question is, are we going to continue going up or go down? I believe the odds in this case are we going higher, but that may not happen in this scenario for other reasons. But based on what I've taught you today, based on this, and remember, odds means what's likely to happen. It doesn't mean what is going to happen. It's very important to understand that as a trader. We play odds. We don't know what's going to happen. We know what, in a certain scenario in the market, what's likely to happen, what the odds are in that scenario. And then we have a strategy in order to take advantage of the odds that obviously should have a positive expectancy as well. Okay, back to you, Anna. Let me put that one. So again, you can subscribe to my YouTube channel. There's some free videos as well. If you want to learn more, you can go to education. There's free educational videos over here. I have a blog as well. I haven't been so active in it recently, but you can go and have a look at some educational videos here. How to become a successful trader with any size account, what the importance of account size is. People think you need a lot of money in order to become a successful trader. Go watch that and you'll learn what the real truth of the matter is. And this is a little bit about how to trade the news. And this is about improve your trading results using a simple and powerful indicator. So again, you go and watch those, you'll get an idea. Even though I don't really particularly use indicators, I do have one indicator, CCI, on my chart, but I rarely use it. I use it for one type of trading, for trading bases. Okay, Anna, it's great to be here. Thank you so much for having me. And again, if anyone has any questions, you can feel free to email me, simon@tradesmartforex.com, or just type them into the chat area. So I appreciate all of you for being here and listening to me. I hope you gained something valuable from it that will help you with your trading. And Anna and the team at InvestorExpos, thank you so much for having me here. And thanks for all the work that you're doing to help traders.
Thank you, Simon. Have a great rest of your week.
Thank you.
Thanks to everyone who've been on today's show. Don't miss our next event on December 12th. And follow us on Instagram to find out more about upcoming events. You've been so active today. I'm so proud of you. Have a great rest of your week.